budget workshop for the Solid Waste Authority will come to order. Let's bow our heads in prayer. Eternal God, our Father, we thank you for the blessing of this day. We ask your divine blessings upon us now as we seek to do that which is best for Solid Waste Authority. We ask, Lord, that you would guide and direct us. Enable us, O God, that we might work together, discuss together, come up with agreements about the budget, and move forward in the manner that you would have us to do so. Bless us now. It's in Christ's name we pray. Amen. Amen. Mr. Vice Chairman, would you lead us in the pledge, please?
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you.
We want to thank each of you for taking the afternoon to donate to the Solid Waste Authority. We trust you don't have anything to do the rest of the day, because we'll be here till we finish. And we're ready to move forward. We'll turn over to Mr. Knight at this time.
Thank you, Mr. Chairman. Staff has put a lot of effort in this budget this year. When you have plenty of money, a budget process is pretty easy. And when money is tight, it's more of a challenge. I'd like to thank Jan for the work she's put in, and Mike. They worked hard on projecting the income, and we want everyone to feel very comfortable in this process. I know we had a workshop a month ago, and Mr. Gray said that it was very beneficial. Hope we have more workshops like that because it was very open. Questions were asked, answered, and we kind of got along and did the work of the authority. And we hope this is the same thing. For sure, we want you to ask questions. We want you to understand the forms, and we'll go over all those page by page. The budget is balanced, and if in fact we add money to an account, you've got to find that amount of money and take it from another account. So it's kind of like a seesaw. And Steve's heard me tell that tale many times. It's got to balance out. The contingencies are very low. We're losing money. We're losing money as we speak. And we will explain to you how we came up with those projected incomes. And as we've said downtown, a budget is your best guess at the present time that you put it together, whether it's income or expenses. But it is balanced, and we're, well, if there's any recommendation out of the day, we would like the recommendation to come from the full board. Those type directions where we can go ahead and change and get first read and put together. And I think we're a little bit ahead of where we've been in the last couple of years on the budget process, but we don't need to slow it down. And Jan and Mike and myself, staff is here. If you've got questions after the day, we're as close as the phone. Come by, take a look, bring your book. We'll sit down and help you through it just as much as you want to spend time doing so. So with that, I'm going to ask Jan to proceed.
Okay. Just a little bit of background on kind of what we do when we begin the budget preparation. We put together a 2-year operating budget and a 5-year capital budget. For the operating budget, what I normally do is I send out to all the departments all their list of line items, showing them what they incurred the actual cost for FY13 and what they've incurred so far for 6 months of 14. So that way they can use that as a basis on if they need to increase a line item, decrease a line item, that kind of thing. They put those figures together and send it back to me, and I use that to form the operating budget. As far as the revenue goes, in order to calculate the revenue, I do an analysis on each line item in the revenue, taking a look at, same type of thing, I take a look at what we actually received in 13 and what we've received so far in 14, and I look at it also by the first half of 13 versus the first half of 14, and then the second half of 13, just to see where we might end up at the end of FY 14. So that way we can determine if we need to calculate any type of growth in revenue or if we need to decrease revenue in some particular area. So that's kind of how we put together the budget. The capital budget is kind of the same way. Each manager goes through and they take a look at any equipment that they've got budgeted to be replaced. And then, of course, any other projects that they have, as well as what we call our wish list items. And we'll kind of go through that as we get back into the capital budget. The first thing I want to kind of have you take a look at, I gave you a handout of a sheet that just has a budget comparison at the top of it. And I was just doing this to show you past couple of years, which are FY 12 and 13. 14 is the year we're currently operating in. And of course, 15 is what we're proposing for next year. And I just thought it was kind of interesting to see that we are at a budget level of where we were back in FY 2012. And since that time period, we have increased our expenses by opening the C&D processing facility, and we've decreased our revenue by implementing the C&D recycling incentive and the MSW incentive. So we've managed to do all that over 2 years' time period, but yet our budget has stayed the same. So I think you can see where we've made a lot of cuts and a lot of adjustments to our budget to be able to maintain that level. So I just thought that was kind of something interesting to kind of take a look at. I'm going to begin with the revenue, which begins on page 1.
Excuse me.
Yes, sir.
Dr. Coakley, are we allowed to ask questions as we go along, or do we wait till a time period later on and try to remember what we wanted to ask?
And which is best for you?
I think it's better to go ahead as we're going along. I think
We'll ask them as we go along. As long as we don't get too numerous with the questions. As long as we don't get too numerous, you know.
Yes, sir. You have a lot of experience in telling me when to be quiet, so I'm sure you'll do that again.
Well, that comes from being a pastor 35 years.
Yes, sir. That comes from me knowing when to shut up. I think it's commendable and remarkable that a budget would be flat for 4 years. And you mentioned cuts, and we know that we have reduced expenditures in a number of areas, not necessarily at this moment, but are there areas where we had increased revenues? In other words, we got where we are by seriously sharpening the pencil and so forth and so on. Are there any areas where there were increased revenues
What, you mean as far as the same time period? These same 4 years, or are you talking about just from last year to this year?
Well, at any time period, in other words, another way to ask the same question is, have we always had the same amount of money coming in and our costs have gone up, and the only way we've dealt with that is to cut some areas, or have we also had some help in the area of increased revenues in some instances?
And we have had, yes, sir, we've had a few, when the prices on the commodities that we're selling from the MRF, if those prices go up, then we've definitely had increases in revenue there. We also have increased revenue in the material that we're selling from the processing facility as well. That was an increased revenue source. So there has been some, but our revenue and our expenses have to balance. So therefore, as the revenue has gone down, our expenses have had to go down as well. When you see like an increase from like 12 to 13 on this sheet, our revenue was increased, so therefore our expenses increased as well. But like I said, where we decreased is, like I said, a year like from 14 to 15. Our revenue is down, so our expenses have to go down.
But
They go hand in hand.
Our tipping fees have stayed the same for what, 15 years?
Yes, sir.
Whenever you've been, I think that in tough times, and we all recognize, like Danny said, the main source of revenue has been flat for 15 years. And the market for recyclables has been down for the better part of the last year or more. But if, in fact, there are some areas where our staff has found ways to increase revenues, it'd be interesting to know, well, we actually got an increase in revenue here.
Take a look at that.
And I think when she starts over the income, you'll see some areas that we've added income this year,
Right.
just like the interest.
Right, exactly.
So I think some of that will be spelled out when we go through the process.
Thank you.
On page 1, like I said, we've got all the different revenue sources. Tipping fees, of course, is just what they are, the tipping fees that we received at the Scales House. We've got our recyclable materials. That is the material that's sold from over there at the MRF. We didn't have, I'm gonna go back to the tipping fee because I do have a better breakdown of it on the next page. But on the recyclable material sales, we're not budgeting any change there. In looking at the prices for next year, they don't anticipate much change there, so we kept that the same. Our interest earnings, that's where I increased that this year because with the new investments that we're doing, we're very optimistic to receive more interest income, so we are budgeting some money in that line item this year.
Excuse me, there's an example. I know that Danny and the company in general, if you will, we just went downtown and said, listen, you got our money, we're not getting anything for it, we want to get something back. And so in this year, that's going to yield 150 grand, and you anticipate 175. I think that when times are tough and you can find ways to increase revenue, that's a good thing. And you guys deserve a pat on the back for that.
Right, thank you. The waste tire rebate, that's the money that we receive from the state, that they collect on the $2 fee that people pay to dispose of the tires. And that's staying about on where we budgeted last year, so we maintain that amount for $100,000 for this year. The container rental, that is the cardboard container rental program that we have, the collection and hauling services. Like I said, we don't charge them for their pickup, but we do charge them for the rental of the container. And so that's kind of staying right on course with where we budgeted last year at $250,000. So we maintain that for this year at the same amount. The landfill gas revenue, like I said, there again, it's kind of staying right on course as where we budgeted last year, so we kind of keeping that at the same level as well. The C&D recycling is the material from the factory that, because the prices not being as great as we thought they would be last year, we did decrease that by $25,000 this year to get that kind of in line with where it needs to be for this year. So we do have that at $125,000. The e-waste processing fee, that is really a pass-through figure. That is the money that we're receiving from the municipalities for the e-waste they're bringing in. There's a processing fee, but there's also a fee that we're charging them because Creative Recycling is charging us to pay to dispose of the e-waste. So that's more or less really just a pass-through. We're booking this here as revenue, but we also have an expense that Esther will go over with you under the MRFs department. And then we have the store. Like I said, right now they're right on budget at the $70,000, so we're keeping that at the same level for next year as well. On page 2.
Jan,
Oh, yeah.
Jan, let me say this too. The top of each of these three columns is 2014. 2014 is the year that we're in today. We're 7 months through that budget today. So that's the figure that we projected for the year that we're in now. 2015 is the budget we're getting ready to pass that goes into effect July 1. Now, 2016 is 2 years down the road, and we have to do that because that was part of our bylaws, that we would do a 2-year budget and a 5-year capital plan. So that's the reason you'll see 5 years of capital and 2 years of operating budget. But really, that center column is the one that we're going to be debating and talking about for the next couple of months.
And these figures are just total revenues without regard to, anything else. In other words, they're not net figures of any kind, they're just, this is how much money we get, from these particular departments.
Yes, sir.
Thank you.
Yes, sir. On page 2, it's kind of a breakdown of the tipping fee revenue. We take each material and kind of, we do an estimate, like I said, based on that analysis that I spoke of earlier, on where we think we may end up this year, so we can determine what kind of tonnage figure we can anticipate for next year. Looking at solid waste, we anticipate about a 2.2% increase at the end of this year of where we had budgeted for, so therefore we did an increase from 225,000 tons in FY14 to 230,000 tons for FY15. So we're projecting, like I said, about a 2.2% growth. We also have, the next line is the solid waste incentive. And there again, we take a look at what we've done so far this year, and we're anticipating it dropped from 216,000 tons to 155,000 tons. It was kind of, like I said, we were kind of doing a really rough estimate last year, since this was the first year that we've really operated with this MSW incentive, so I feel like the 155,000 is going to be a more accurate tonnage level for the MSW incentive. Yard waste, like I said, we haven't seen a lot of growth there, so therefore we've got it at the same level as FY14 at 34,000 tons. Mixed construction, we had 90,000 tons budgeted for FY14. In looking at it and doing an analysis, we've seen about a 6.67% growth. That's where we anticipate being, hopefully at the end of this year. So we factored that in, but then of course we also do the reduction for the 30,000 tons that we anticipate losing with the flow control. And we've already seen, as Mike's got some information for you, we've already seen a big change in our loss of C&D so far already. So I feel like our projections to lose the 30,000 tons are going to be very accurate. Let everybody get their sheet. So like I said, we do have a growth factored in, but we also do have the reduction. So we went from 90,000 tons to 66,000 tons. So that's our biggest decrease in our tipping fee revenue.
Where would that be, what line item would that be?
That's one where it says mixed construction. If you come over to FY14, we had 90,000 tons. And if you come over to FY15, we've got 66,000 tons.
Okay, thank you.
You're welcome. The C&D recycling, we had 10,000 tons in FY14, and I've brought it down to 7,000 tons for FY15. And I know one of the biggest questions would be, each month when we report on the C&D recycling, we always tell you that we're doing about 1,000 tons a month over that processing facility, and we are. But what we have to take into consideration when budgeting this is the rejects that leave that facility and go up on the hill. So therefore, we have to reduce that C&D recycling figure by those rejects, because otherwise we would be recording that revenue twice, once over there and once when it goes up on the hill. So therefore, we are not double dipping in our revenue by recording it twice. So I just want to kind of explain why that looks a little bit low. We had a few other little items, like I said, that I did reduce. Our tires without receipts are down a little bit, the shingles down a little bit, and the land clearing debris. So like I said, so overall, I think it's like a 6.4% decrease in our tipping fee revenue, FY14 to FY15.
These are revenues, right?
Yes, sir. These are all revenues.
And we have, in effect, have been able to offset the anticipated, get my numbers right, 30,000, I think, is 30,000 tons, and that equates to how many dollars?
I think it's 720.
720?
795,000.
795?
Yes, sir.
800,000. That means that we were able to pick up 800,000 somewhere else.
Well, we also built in an increase too, a 6% increase. So it's not quite 30,000. It's really only like 24,000 tons. But yes, sir, we were in some. As you'll see as we go through the expenses, we'll be able to show you. We'd have the unfunded positions, and of course the reduction in the closure and post closure because of the reduction in the tonnage, and the reduction to the the community waste disposal fee as well, the $225 that we pay the county. There's a reduction in that
But
because of the
being
tonnage.
gross revenues, you know, our number is flat throughout the 4-year period that we're talking about, so, and we're absorbing or dealing with or overcoming, $800,000.
Mr. Gray, our FY14 budget revenue was $13,577,000. Our budgeted this year is $13,153,000. That's about a $400,000 difference. We was able to try to make up about $300,000 of that $795,000.
Through anticipated growth in both C&D and revenue and MSW revenue.
Yeah, and that's projected. We don't know that that's going to happen, but we hope it will.
All of it is.
Well, the C&D, what you just passed out the sheet here, and this is the first week
In March.
in March.
Yes, sir. We took first week in March of last year versus the first week in March this year,
And we've lost
33%.
33%.
If you look at the bottom of the page.
The first week, so,
Just-
but
just
if
the
it
first
holds,
week. Right.
if it holds like that throughout the year, you're looking at $900,000. Lost in revenue.
Yes, sir.
Picked up by making these other anticipated increases in other ways.
Well-
In other words, it's not something that we,
I think it's made up mostly of cuts instead of increases. We haven't increased that much in funds coming in, except in that interest account. But most of this hitting this budget has been cuts. We've cut 5 people. We've cut 5 slots out of the budget.
so I'm just reading the numbers wrong in saying that the revenue is staying flat. And we're able to absorb these adjustments, if you will, downward. I understand we're making cuts, but it seems like the revenue is staying flat, staying the same. So some of the effect is being absorbed by growth in both MSW revenue and C&D growth.
She said MSW, we're projected at growing at about 2%.
Yeah, I think
We
that's
figured in about 6% growth on C and D because building permits and everything's up. But then we put that growth up against, raised it up, and then we had to cut it back,
Right.
losing 30% of all the C and D. So the growth is in those figures, but our best guess right now is we're gonna lose this amount of C and D that we projected. And these projections could change up to the final reading of this budget by county council.
Yeah, right now you're basing it on 1 week out of 52.
Well, we're basing it on what our projections were when we knew that we were losing flow control. We had said all along that we anticipated the 30,000 tons, and that's the way we would prepare our budget.
I understand that number. That was one that was derived earlier, but going over to what Mike Campbell was talking about, any reliance on this sheet is 1 week out of 52.
That's right. That's just another, exactly,
and-
another way to estimate.
As Danny says, that can go all sorts of ways.
Right. And we did do the same thing for the month of February, the sheet that you have in front of you, but it wasn't accurate because of the storms that we had during the month. You know, there was, the tonnage was so back and forth, it wasn't a good analysis, so we felt like March would be our, hopefully, a good clean month that we can continue to do this with. So hopefully, maybe by the end of the month, we'll have a better analysis for you to look at.
Thank you.
You're welcome. Any other questions on any of the revenue?
Yeah, let me just make certain I understand what's going on. When we look at revenue, we're actually talking about going back to the same revenue level as we were in 2012.
That's exactly right, yes, sir.
So we are actually going back 2 full years in terms of revenue level. So it's not that we're staying flat.
That's exactly right. We're seeing a decrease.
We're decreasing in revenue, and 6.3% of that, the tipping fees are being reduced by at least 6.37%. And C and D is projected is going to be at least 16.7 in terms of recycling.
Yes, sir.
So we're using that to help offset some of what we're doing up here. And then the e-waste projection
Exactly.
is what we're doing to try and help offset the decrease in revenue.
Yes, sir.
But we're actually being reduced in revenue just from last year alone, $600,000.
You're correct, yes, sir. Yeah, revenue's not staying flat, you're correct.
Okay, I just want to make sure I was seeing the same numbers.
Revenue is not flat.
No, sir. If you look at FY14, our revenue was $13,577,000. This year, we're at $13,153,000. There's a decrease in revenue from FY14 to FY15.
$400,000 worth.
Oh, okay, I see what you're saying. Depends on which column you compare it to. Reverend Coakley was comparing it to a 2-year period going back. It's flat from that perspective, or roughly flat, but from the perspective of a more recent time period, it's down 400,000. Correct?
Right.
It was
That's
down
even with- that's
2013
even-
and for the 2014. In other words, well, no, it didn't, excuse me. 2012, and then 2013 went up, 2014,
Right,
it
we've gone,
dropped, and then the projected on 2015 is 13,150,000.
right, we've gone down the past 2 years. You're
2
exactly
years,
right. We've
okay.
had a decrease in revenue the past 2 years. And that's, like I said, and that's even with us projecting a growth in MSW. Our revenues are still decreasing.
That had to do with just general market conditions, didn't have anything to do with C and D, because C and D just started. I'm talking
What,
about.
the last
Oh.
year? Yes, sir. That's right.
Had to do for,
With the decrease from FY13 to 14, right.
other factors besides, the C and D carve-out caused us to lose that revenue in those, in 13 and 14. But we just started.
The economy.
Yeah, the economy. Look on page 2, if you would, and then I want to point out something to you. In projected tonnages in FY14 on construction or mixed construction, it's on page 2, Mr. Gray. It's mixed construction, we projecting at 90,000 tons. If we continue to the reduction in tonnages that we're seeing through the first 2 months of this year, since flow control change, we won't even meet that projection. So even the numbers, when you project the calculation of the tonnages out to 396,830 at the bottom, it won't even meet that number based on what it was. So we would take probably I don't know, 33% of 45,000 tons. So to get down to that, our projected revenues for 2014, we may not even meet them because of the reduction in tipping fees, amount of reduction in mixed construction that's coming to the landfill, which will be a reduction in fees.
When you say we won't meet them, you mean our losses will be greater than what we anticipated?
For this year, through June 30th of this year. See, we're projected with flow control in place, 90,000 tons of mixed construction for FY14.
Right.
And when she's got it on this sheet, she put it, because we projected that, she put it on her sheet for FY14 projections. But we've seen a reduction in the amount of mixed construction coming into the landfill currently, so we may not even meet that 90,000 ton projection.
Yeah, we got it.
Have we got a number on where we are now on the mixed construction through, is that? I would expect so, my goodness.
I have it through like December of this year. We were at 47,686 tons.
That have been 6 months of the year.
That was 6 months of the year, and that was with flow control in place.
Right. We're not
Okay, so
talking about
take
flow,
30%.
we're not talking about flow control here. We're just talking about
Right.
tons, right.
But now that we've gone with the flow control, with C&E coming out in the month of March, we saw a 33% reduction in 1 week already. So if that continues throughout the month and the rest of the year, then we're looking at a drastic reduction in what we've projected for the year,
About 14,000 tons.
With
which
Easter-
comes up to what in numbers, in dollars?
380,000.
So instead of looking at, in terms of tipping fees coming up to 9702, 380, we're gonna be looking at $300,000 less than that.
380,000, yes, sir.
And that's for the current year?
That's for the current year, yes,
That's
sir.
the current year.
Yeah, I get where you're going with that. If right now, we're sticking with the numbers that we started with at the beginning of the fiscal year. Obviously, we're going to have an offset. You could debate whether 1 week is a proper base period, but we will have a reduction, and it doesn't look good right now. And
1 week is not, at least like you say, Dan, 1 week, it's just 1 week is all we're looking at. And we've got the rest of, till June 30th, and
Right, but Dr. Coakley was saying if we go with the same, I think I was understanding what you were saying, Dr. Coakley. If we stick with the number that we have right now, we might end up with a $400,000 shortfall in revenue for
Yep.
this fiscal year, which is not planned for yet.
That's correct.
I'm sure you'll talk about that later.
Well, we'll end up in the black this year.
Okay, well, that means you've already been working on it.
We started working on it July 1. And the staff is there. We can't catch up the last month of this year. We've got to be ready if, in fact, we lose this flow of stuff. And we've just been watching the budget, and we'll continue to watch it.
I get it. Hopefully, we anticipated more expense than we're actually going to incur, and that Danny's been tightening the screws, and we'll be able to deal with that 400. If it goes to 400,000, hopefully it won't be that high. But I take your point, and that is that this was something that, at least in my mind, I haven't thought about. Always been thinking about the next fiscal year, but we're experiencing it in this fiscal year as well, to some degree, yet to be determined.
All right.
Thank you.
Thank you. Any other questions on the revenue? Okay. Page 3 is a summary of the expenditures. At the top, we have the 3 different divisions: the General Administration, Disposal Division, and the Recycling Programs Division. As you'll see, most of them have a decrease except for the Recycling Programs Division. They have an increase in their division to do with some transportation costs for some material they're receiving over at the MRF. And once again, like I said, Esther will get into that when she goes over the MRF's division department with you. We have the designated fund transfers for the closure, post-closure, construction, and waste diversion. One I wanted to kind of point out to you was the waste diversion programs. We had agreed, like I said, that was a program that we previously had funded through 25 cents per ton of MSW and C&D. And with the loss of flow control, that was one of the areas that we determined that we were not going to continue to fund based on the tonnage. We do have some money already in that account that we will continue to use for consulting, for any travel, or anything that is needed for exploring those different options. We also, if there's any money to transfer throughout the year when I do the quarterly transfers, if the board deems it money to be spent there or to be put there, we can also do a transfer there during the year at the board's discretion if that's what they choose. But we will not be funding it based on the per ton fee like we have in the past. So that's why you see that 14, it had 78,750, and in 15, I've got 0 in there for that. Under the non-departmental, I wanted to kind of point out to you the biggest one there would be in the first line item, the rate stabilization or contingency funds. Those are the funds we set aside for those things during the year that come up, something major that may happen, that we may need to go to the board and ask to pull funds from there to cover the expenses, something that we had not planned for or budget for. I did some looking back, and in FY12, we had 280,000 in contingency, and in FY13, we had 289,000. That's normally been the trend of about the money we like to maintain in there is around 250,000. As you see, we did not have it in FY14, and we have even less in FY15. And that's probably the one area that I'm very, very concerned about, because I don't think it leaves us anything there for a just-in-case type of thing. You know, there's been times, like I said, not very often necessarily that we have to pull from there, but there are times, and as tight as this budget is, I would be more comfortable if we could get that level back up, at least to where we were in 14, if not higher, would be wonderful. So that'd be one area I'd like for you at least to kind of keep in mind as we're going through this budget.
Jan, is there a formula that's used, or is that number backed into?
That number's backed
Okay.
into.
All right.
It's usually whatever,
Right.
just what it says. It's kind of our I'd say leftover if there is any. And like I said, that's extremely low. And that's after we went back. I'll be honest with you, after we went back and made some other cuts where we felt like we could to like I said, to be able to have some there.
But the staff feels like we need more than $100,000 in
Yes, sir.
contingency.
Most
Now, at the
definitely.
end of the year, if we got any money left over, we roll it back. What do we,
No, sir, it just stays there.
just stays
It just stays there. And we don't have anything that rolls over.
Yeah.
And can you give examples of how those funds were used in this current budget year?
We have
Do you-
we have not used it this year.
Okay.
I know in the and a couple years ago, I should say, a couple years ago, I remember Bill had some hauling that he needed to have done. I'm trying to, what was it? Cover dirt. Yeah, that he needed hauled, and like I said, it was an expensive project, and so we had to go to the board then and ask for that, that to be covered.
The biggest thing, explain to them how we spend that money.
Well, we spend the money only by like I said, by going to the board and getting the board's
Board
approval.
Approval.
That's nothing that we can do on our own. We have to go to them and get their approval for it.
What fund is before, I think I came to 3 or 4 meetings and listened right before I came on the board. And I know, I was looking at the store, and $335,000, I think, was voted in to build another building back there behind the store. What fund is that in?
That's in our capital budget. You'll see that when we come to our capital budget. Because of the amount, it's a capital project.
Okay.
So when we get to that in the back of this book, we'll get to that in just a little bit, you'll see it back in that area. And that would come out of a construction and development funds, the designated funds for construction and development, that was where that money would come from. But like I said, we'll get to that, like I said, when we do the capital budget, I'll show you where that is.
Okay, thank you.
As you were just explaining, there are some balance sheet items which we're not looking at right now. We're just looking at income statement, income and expense statement right
That's correct.
now. And, but where would the number be for what we transfer or pay to the county?
That's, if you look at the next line item, the Horry County Community Waste Disposal Fee, that's the $2.25 that we send to the county. If you see in FY14, we had $708,750, and this year we've got $666,000.
And then on the store, is that paying for the salaries over there, or what is that?
It is, it's the salary, that's the salary expenses, and that's really about, like I said, about it, because we absorb the rest of the utilities and that kind of expenses, so it is primarily just the salaries.
Yeah, so, seems like I had one other question. But these are what you anticipate. I know you're trying to anticipate, but what you anticipate transferring from the money that we take in, from the revenues, you intend that they would come out. Now, under general administration, that's where consulting fees
Yes,
go.
sir. Yes, sir. You'll see that in just a few minutes. I'm going to kind of go through it a little more detailed. We're gonna go through each department, and we'll kind of go through it more of a line item by line item, and you'll see that line item when we get to it.
Okay, thank you.
You're welcome.
Just one I didn't think we paid salaries for the store.
Well, the way, we have to book that expense because we receive all the money for the store.
Okay.
So therefore, we book that expense, and then at the end of the year, you're right, we don't actually pay them. But, like I said, at the end of the year, when we split the expenses and split the revenue with them, they do pay it, but we do have to book it as an expense and a revenue.
Another pass-through, just
Right.
like e-waste.
Right.
The
They-
store is operating in the black though, right?
Yes, sir.
Yeah.
Yes, sir. Right now, they're operating right on budget.
Good.
The only other one I wanted to point out to you was the fuel contingency. We put that in, a couple of years ago because of the price of fuel going up and down. And, this year, we ended up having to reduce it because the cost of fuel had gone up, of what they're anticipating. And in order for them to have it in their operating budget in each department, we had to reduce the contingency. So that was one of those items that we kind of had to do to help out the operating expenses. On page 4, I'm sorry, any other questions on that? Well, like I said, we'll get into it a little bit more detail. Everybody's gonna kind of go through their division. Page 4 is just a list of the budgeted personnel. And I just wanted to point out to you, I'm gonna make some changes to this when we do the final budget, but I wanted to point out to you that we've got several of them asterisk. The Deputy Director of Finance and Administration, the Recyclables Marketing Clerk, and three.
What are you pointing out?
I'm pointing out the 5 positions that we have unfunded this year. It's on page 4, and they're the ones with the asterisk next to them.
Okay, thank you.
And then we've got 3 heavy equipment operator 2s. Those are the 5 positions that are unfunded for FY15.
Does that mean that if we had the money that we would like to have, we would hire people and put them to work in those areas?
If during the course of the year, we see that, our projected revenue is more than what we anticipated, and we feel the need and we have the money available, that's correct. We could come to the board and we could ask for their approval to fund that position.
Yeah, in an ideal world, we wish that we could staff up to these levels, but right now, we're not in an ideal world, and we anticipate some
Right,
shortfalls, and so we're holding off on filling these positions.
that's correct, yes, sir. Or
Bill,
or funding them, that's correct.
Right. The way you handling that though, you're doing overtime, having to do overtime with some of your people though, right? You're having to pay overtime rather than, hire another person.
Yes, sir.
Right.
Yeah. I noticed, or I thought it was quite a bit of overtime all the way through in different things.
So we've got 56 full-time funded positions and 7 part-time.
Yeah, when I was in the Marine Corps, that's the way I got paid. I'd be acting platoon sergeant. That means I had to do the work, but I didn't get paid. I get paid for being a corporal, but I see what you're saying.
On page 5, this is just a little more kind of detailed analysis. Like I said, FY14, the first column is last year's budget, approved budget. The next column is this year, the year we're currently operating in. 14 is the year we're currently operating in. I'm going to get this right in a minute. 15 is what we're proposing for next year. We have an increase or decrease, and then the percent of increase or decrease. We've just got it kind of broken out by department, just for you to kind of see where the increases and decreases are coming from within each department.
Is there any decreases?
Any decreases? Yes, sir.
Those with minuses beside them.
What's that, Denny?
Those with minuses beside them is decrease.
The administration and finance, they had a decrease in.
Right, overall, they've got a 5.8% decrease. Disposal division overall has a 1.2% decrease. The recycling programs has an increase of 2.3%.
What's the justification for the increase in the board of directors?
I'm going to get to that when we go through these line items.
Okay.
That's where I'm getting ready to get started. We'll turn to,
Excuse me, so those would be, those minuses, as Danny was saying, that's comparison of proposed next year versus current this year.
that's correct, yes, sir.
Thank you.
First department begins on page 6 with the board of directors. No change in personnel on page 6. Page 7 is just a summary. of the Board of Directors. And I'm going to begin on page 8. First is the personal services for the Board of Directors Department. FY14, we budgeted $30,887. In FY15, we're proposing a budget of $44,227. Primarily, the changes in the salaries, and that's to do with the fact that we're having more meetings, and, which is a great thing. We're going to more meetings, we're having more meetings, and so therefore we did an increase there for that, as well as an additional $4,000 for training and certification. Because like I said, luckily you're attending more workshops and seminars, which is also, to me, a very positive thing. So that's where the increase is for the Board of Directors on that. Under supplies and materials, there's an increase, just a slight increase there. I do want to make one note, under the line item for telephone and fax, I've got in there cell phone. There aren't any board members with cell phones. That's an old line item that needs to be corrected. So it's for the iPad service for board members. Under business and travel, there is an increase. We had $6,700 budgeted for FY14, and we've got $10,700 budgeted proposed for FY15. That also has to do with travel and lodging. So overall, for the Board of Directors, it was a 41% increase. $42,487,000 for FY14 and $60,027 for FY15.
And that's mostly related to anticipated research and development, if you will, going to try to find what's not.
No, sir. When I put together that budget, what we did is we looked at what you spent, what the board had spent the prior 6 months of the year, and number of meetings we have, when you come to a meeting and you do all that stuff, which is good that you're involved in those meetings, and other things. We looked at those dispenses. We've had to transfer money from other parts of our budget into those budget to cover those increased meetings over the past 6 months in attendance in those meetings. So therefore, we increased the budget next year to take care of it. So we wouldn't be in a negative. See, we may have had to take money from the administrative department to go to the board this year to cover some of those expenses.
Yeah, the thing I had in mind is what Danny calls the travel squad. I forget what you call it.
That comes out of the waste diversion account.
Waste diversion come out of that. Thank you.
Any other questions on the Board of Directors? Okay. On page 10 begins Department 501, which is the Administration Department. In this is Human Resource and Mike and Danny, as well as a custodian for the building. We just have one unfunded position, the Recyclables Marketing Clerk, that's in this department. It's just a summary on page 11. And I'll begin on page 12. As I start here, I kind of wanted to just cover this kind of for all the divisions and the departments with salaries and benefits. You'll see some increases in some of the departments to do with those. Salaries we always build in for our step plan. This year also for our retirement, we had to build in an increase because retirement's going from 10.6% to 10.9%. As well as health insurance and workers' comp, we always make it mandatory, or not mandatory, but standard that we build in a 20% increase in those areas as well, just to cover any increases that we anticipate coming up in the next year. As Annette mentioned this morning, we've been very fortunate with our workers' comp. Our increase is not based on the fact that we've had more accidents or anything, just any kind of increases that they may make during the year is what we try to plan for. So as you go along, you look at all the divisions, you'll see some of those same benefit changes throughout everybody's division. Under personal services, we had budgeted $528,815 in FY14, and we have $483,273 proposed for FY15. The biggest change being in the salaries area because of the unfunded position that we have in this department. On page 13, contractual services. We had $378,899 budgeted in FY14, And we have $377,793 budgeted or proposed in FY '15. Where we made a decrease, of course, was in our consulting and miscellaneous. This is the area, Mr. Gray, that you had mentioned.
You're on page 13.
I'm on page 13, yes, sir?
Skip 12 and just went to total.
Yes, sir. If you look at the line item, it's line item 2415 for consulting and miscellaneous. Excuse me. We decreased that from 170,000 to 165,000. And I've got a breakout of that if you need some information on what makes that figure up.
And what number was that?
On page 13, it's kind of right in the middle of the page, consulting and miscellaneous. That's the area that you had mentioned, you'd asked me about just a few minutes ago, where that line item would be. Right there, that's it, where it went from 100, we decreased it.
Any questions that, Danny referred to this at the beginning of the meeting. If I have some questions of understanding or whatever on this page or any other page, I can always call you and Mike, and you always are very,
But I've got it,
very much available. Yeah, thank you.
Right.
I see what you're saying. You dropped,
yes, sir. We've got, like I said, we've got 15,000 in that budgeted for the solid waste management plan, 20,000 budgeted for the disaster debris plan, 30,000 for Garrett and Moore Engineering. They oversee our financial assurance. And then we have $100,000 for lobbying and consulting. And the $100,000, I've got it broken down as well. We've got $25,000 for the new contract that we just entered into with Beam and Associates. We have $25,000 remaining on the contract that we have for consulting that runs out at the end of October. And then we put $50,000 in there for lobbying for next year.
Thank you for that, because I was gonna ask you for the breakdown. Anything that you have, like consulting or miscellaneous, I always like to look at the breakdown of how you're spending the money.
That's not a problem. We can get that for you.
what did she say?
She was appreciative of the breakdown of the, like I said, she likes to know what kind of makes that figure up. As they do their budgets, everybody is required to also do justification forms to go with every line item. So if you ever need to know anything, I started to say, staff is wonderful about putting together information for this. So anything you need, you just let me know.
So if you could print us a copy of that page, email it to us or whatever.
Yes, sir. We can get that. I can get that for you.
I'd like to get an email, maybe Pam would too, about that.
Okay.
Thank you.
Everybody else want one?
Sure.
Okay.
Send it down.
That's not a problem. All right, on page 14, under supplies and materials, FY '14, we had budgeted $35,850. In FY '15, we proposed $44,250. Biggest change being under our small equipment. Every year, we try to put in a couple of things. We have a refrigerator in there. As you see in 16, we've got a stove. We put those in there as a just in case. You know, if the stove or the refrigerator, something was to go out here in the building, you know, we try to have it planned. Same thing with the computers. Just because it's budgeted doesn't mean we necessarily purchase it. These are just those items we put in there just in case. So we did have an increase because we added a cabinet and file cabinet and refrigerator. On page 15, under business and travel, we had budgeted $41,914, and we decreased it to $40,515. Just small changes there. Depreciation, we had $36,90 in 14, and we've got $8,873 in 15. That's to do with a new SUV that we have that we started depreciation on in 15. The disposal fee participation program, we did not make any change there. That, again, is that where people request waivers of the tipping fee, and that's where that money comes from there, from that line item. So overall for the, oh, I'm sorry, somebody have a question?
I just was gonna ask if they're spending that much money, are they bringing that much in, or they could bring twice that much in, I feel sure.
Well, what the policy says, no one person can ask for more than $1,500 at one time a year. So an organization can't exceed $1,500 in a year. So we did that to be able to spread it around for nonprofits and other things, so that one person
I think
couldn't
that's a
come
good
in,
idea.
couldn't come in and eat up the whole $10,000 at one time.
Bless
Yeah,
Through December, they had only spent $440 in that account.
really?
Yes, Sam.
Don't tell people.
I was just gonna say, I can't, there's 3 or 4 people I know of in different things that have asked me about doing that, so don't tell people that.
Yeah, we just approved one for the Burgess community.
Okay,
We're gonna put a can down there and pick that up, so wave the peas. So it's, we're not tight on it, but we watch who they are, what they're gonna be doing.
I would have thought Keep Ori Beautiful would have spent more than that by now, frankly.
But
Danny,
they can't get but one hit.
Oh, okay, so if they don't do it all at one time, they
Yeah,
can't do it.
and that's what
Gotcha.
we've explained to them.
Okay,
Just don't send it through Keep America Beautiful deal. Each community will send it to us. Because if it goes through downtown, they won't get but one time,
okay,
based on policy.
okay.
yeah, and then we don't,
Doing it.
and when we don't spend that money, that's the money we get to transfer.
Okay.
Yeah. Any questions for Department 501, the Administration Department? Okay. On page 16 is a budgeted personnel for the Finance Department. Finance Department includes myself and the finance staff here, as well as our Scales House clerks. And we do have one unfunded position. The Deputy Director of Finance Administration is unfunded for FY15. Page 18 begins the line items for 502. Under the personal services, FY14, we had budgeted $564,180, and in 15, we proposed $485,138. And there again, that is due to the unfunded position that we have. We've got the decrease there. On page 19, under contractual services, we've got $470,436 budgeted for 14 and proposed $40,436 for 15. That decrease is due to the accounting and auditing line item. I was able to decrease that $5,000 because we just signed a 3-year contract with Smith Sapp. Did leave a little additional amount in there in case we were needed to utilize them for something else throughout the year. Under supplies and materials, we had budgeted $23,100 in FY14 and $29,000 in FY15. There again, kind of back to our small equipment. We had an increase there, basically because of the financial server that we have here. Every so many years, we have to do an upgrade, or at least plan for an upgrade. If we have to do any kind of software upgrade, a lot of times we have to upgrade our server as well. So I've got that budgeted in there for next year. Under business and travel, just some slight decrease there on some line items. Bad debt, we budget $4,000 in there each year, and every year when our auditor comes in and takes a look, that's one thing he always asks me about, or he takes a look to see if there's any need for us to have to make an increase. We've been very fortunate that we have not increased that in several years. Like I said, we are very lucky with our credit policy, that it keeps everything very well under control.
Give me an instance of bad debt.
We currently have one customer that we're working with now that their account had gotten behind, and according to our credit policy, they have a couple of options. One is they can sign a payment, or like a repayment agreement plan, and they have to set up payment arrangements with us. And while they're on this agreement plan, they're able to use the facility, but they have to pay in cash. They can't charge anything else on their account until, of course, the account's paid in full. If they falter on this at any point in time, we have a signed judgment that we can turn over to our attorney or the magistrate, depending on the amount of it, to file a judgment against them. And then at that point, once that happens, then like I said, they can no longer use our facility until it's paid in full. And then a year from that time, they have to pay cash and then have to go through the credit application process again. Like I said, last year when the auditor came in, we had one account, and I explained to him that we were working with that account, and we're still working with them some. They've gotten it way down. We're still working with them on it. But like I said, we had one. Out of all of our accounts, meaning all the landfill customers, as well as all the cardboard customers, as well as our MRF customers. We had one account that we had that we were working with. So our credit, I mean, our outstanding debt is tremendous. The ladies do an excellent job following up. And our credit policy is, like I said, they get behind 30 days, the next month are due their entire bill. You know, we give them 30 days to pay the bill. But like I said, once they go past due, their entire bill is due immediately.
Do you,
And they do. We reduce their credit limit every time they're late. After they're late 3 times, then they go on a cash-only status.
okay, I guess 30 days, if you brought a lot up here, you'd have a pretty big bill.
We do have. Mhm.
One time we had $360,000 in debt,
My goodness.
but there was no repercussions for debt at that time. You could have a debt and they fussed at you, and the staff spent 3-4 days a month, every month on the phone, please send the money. You get a emergency package on the last day and the last hour and that kind of stuff. But we really did not have a policy. But yeah, it stayed $250,000 all the time.
Well, I'm glad y'all put in a policy. Is there not a monetary limit that they can get to
We do have
within the month? that
We
you
do
can't
have
go
credit
over?
limits established
Right.
we didn't to begin with, years and years and years ago, we didn't, but, but we do have, as we're setting up new customers, everybody gets a credit limit. Basically, what we do is we try to look at what they've been bringing in, how much they're bringing in. If they call us and tell us they have a big project for 1 month, we try to, but basically, usually they all start out at usually a pretty low credit limit. Then as they need it increased, they can call us and they can request it. We don't do it on our own. They have to call and request it, and they're only allowed, I think, 1 request every 6 months. So,
Okay, because if they really went bankrupt or went out of business, judgment do you no good.
No, that was the problem. They would sell a company,
Right.
which is where we got trapped. And the company owed us money, and he sold the company and said, not my problem.
I can see that. I'm glad you solved the problem. Thank you.
okay. Any questions on the finance department's budget? Page 21 is our non-departmental budget. This just kind of is our catch-all area, all those little areas that don't really fall into a specific department. Our unemployment compensation, no change there. The health insurance is for retirees' health insurance, and no change there. The Horry County Community Waste Disposal Fee, once again, that's the $2.25 that we send to Horry County based on the tonnage. As you see, there is a decrease from the $708,750 in FY14 to $666,000 in FY15. We've got the fuel contingency, as I talked about earlier. We have the contingency funds that I mentioned to you earlier also. The SWA support services, that's the amount that we bill the county for the administrative costs, for our portion of what it costs us to generate the bill and to oversee the recycling centers. And then, of course, we have the store budget. And
Why are we not billing the county enough to cover our costs?
we are, that's why I'm reducing it here. It's a minus here. We don't actually take that cost and put it back into what areas. And so we just do it as a reduction in our expenses here.
Oh, okay.
Because we are.
You wouldn't do us like that, would you, Steve? Well, I think that we'd solve our problem quickly if we just didn't send you that $225. And don't you have a balance in the funds that you have for the recycling centers?
Fund 6.
Fund 6? Okay. And that stays in that fund, and it's only spent on that? Okay, you sound sickly. Okay.
Man,
I hate to beat on you if you're sick. Pick on you there. Okay, thank you.
How about the fuel, have we had to go into the fuel contingency fund at all, or does it look like we're gonna have to this year, or?
Well, we have not in the past. This is only the third year we've had it built in. But as you see, like I said, we did reduce it this year because we anticipate it going up, and so we wanted to go ahead and at least have it in the departments so that hopefully, maybe they won't have to go into that, but we know, we've been fortunate enough. Like I said, you know, Bill goes online and does a really good analysis of where he thinks the prices will be, and he takes a look at his fuel consumption for the previous year to, you know, try to get a good estimate of where he anticipates his fuel, changes to be. So we've been lucky there.
That's one of the areas that if it turns out the gas doesn't go up as much as we thought it would, we could transfer out of that fund to cover some other department that overran.
If that's what the board wishes us to
Yeah,
do.
I mean, it's a possibility.
It is.
But I noticed on the 225, you're reducing it in next year and the following year. Well, a little bit, not appreciable amount, but is that consistent with our notion that we're actually gonna have an increase
Yes,
in
sir.
business?
That figure is based on the tonnage figure. We pay them $2.25 of every ton of MSW and every ton of C&D material. So I take the tonnage that we saw in those projections that I had earlier, I take that tonnage figure, multiply it times the 225 to come back to this figure. So it is based on that growth as well as the reduction.
I know, but this one's going down, and we anticipate our growth. Maybe I'm misreading something.
Well,
But
there was
the
C&D, and the C&D didn't have had a growth, but it also had a 30,000 ton reduction.
Yeah, C and D is not, we're losing the C and D, so.
Right,
I got it, sorry, thank you.
okay.
The health insurance you said is for the retirees, is that totally funded yet?
Not, well, this is our last year. After this year, we'll have it totally funded. Yes, ma'am.
Thank you.
Any other questions on Department 999? All right, well, I'm going to turn this over to Bill. He's going to go through the disposal division for you.
Good afternoon. First thing you'll notice on disposal division, we did drop or decrease our budget 1.2%, which I think was about $60-some thousand. So we've done that, I believe, over the last 3 or 4 years, keep decreasing.
Which page are you on, Bill?
Getting ready to start on page 22. Department 504, Environmental Management. That shows our,
Are you referring to?
I'm sorry?
You were talking about a reduction. I was just gonna go,
Yeah, and I was just giving an overall summary that, you know, we've
You'll come to
reduced
it
our
later.
budget, right.
Sorry.
We'll start on page 22, Environmental Management Department. You'll see we have 4 positions. One of those is unfunded. We've had that in there, I think, since last 4 or 5 months. We've made that decision there, so we're moving along without that position filled. If you'll turn over to page 23, you'll kind of see the breakdown of all the different services we have there, what each kind of line item summary totals are. But I want to move over to page 24. Again, personal services down at the bottom, you'll see in FY14, we went from $235,251 to our budget in FY15 of $206,397. Again, the reason for that, the drop there in personal services for that unfunded position. So we'll continue moving forward with that. We'll move over to page 25. One thing I want to point out on monitoring and testing, we have a budget of $52,000 in there. There's no change there. $48,000 of that goes toward groundwater monitoring each year. We have that event usually in May and November. 48 of the 52 goes for that. We have 20 wells that surround the landfill property out here. We contract with the third party. A report is put together, sent to DHEC, reviewed by them, and then we get a response from DHEC. And so far, we've not had any kind of pings or dings on there. So that pretty much makes up that big number right there.
Tell them about the do-good test.
Another thing we do quarterly, we go out there and we do 4 samples at Sterrett Swamp. We're not required to do that under, there's nothing that says we have to do it. But as good citizens of the community, we elect to go out there and test it, and we also send that to the lab in Columbia. Nothing's ever come about on that either, no hits or pings out there. So that's kind of just another thing we do for our neighbors out there to give them insurance that we're doing everything right here. And, you know, we want to be good stewards of the environment, so we also do that. The next line item is 3111, the gas maintenance. We bumped that up from 75 to 80,000. The primary thing for that, we have 50 wells out there, 50 gas wells. And our gas system has been on board since 2001. And each one of these wells has a leachate pump in there to try to keep the leachate pump down so the gas will migrate properly. We have cannibalized and we've pieced together these pumps for 13 years now. We've bought a few, but it's getting to the point where the leachate is corroding them so bad, we're gonna have to buy replacements. These pumps are like $2,500 each, and we're looking next fiscal year to have to buy 10 of them. That's what we're projecting we're gonna need in order to, you know, keep the wells in good operation and keep them pumped down. So that's why that increase there. So our contractual services, they increased from $355,000 in FY14 to $362,000 in FY15. But like I said, primarily it's the landfill gas maintenance.
Bill, can you not capitalize those pumps? Equipment?
No, because they're under $5,000 each, so we have to purchase. It's more of a maintenance item anyway than a capital item.
They try every year, trust me.
Yeah.
We do. Continuing on page 25, which is supplies and materials, looking at uniforms, you'll see our uniforms went down about $800. Again, one person's non-funded in there, so we have less personnel in that division. And moving on down, let's see, it'd be page 26, you'll see depreciation. FY14, we had $23,762. FY15, we're looking at $21,512. We had a service truck budgeted for FY14, which we have put off to FY15, and that anticipated depreciation. And that depreciation, Jan, correct me, doesn't start till we purchase.
That's correct.
The following year till we purchase the vehicle. So we put that vehicle off. Any questions on Department 504, Environmental Management?
I was just gonna mention something here, Bill, and the depreciation that you see on here, this depreciation is based on our equipment replacement schedule. That's the only thing that we budget here is for the equipment that they're replacing during, you know, it's in that equipment replacement schedule. So as they purchase equipment, you know, we funded that based on what they actually purchased it for, and the depreciation, like he said, does begin the following year. So if they take a piece of equipment, like he mentioned, they bumped one out a couple of years, that'll reduce that depreciation because they've extended the life of it. So when you see some of these changes, that's what it kind of, what he's referring to.
Well, I have Jan's attention to these various department classifications, 504 and then 2320. Does that match up with the, the voucher and the check and so forth and so on? Or when you write a check, you bump it against some account number?
Yes, sir.
And these are the headings and subheadings and so forth and so on.
Exactly, yes, sir.
Match cost with revenue or expense with revenue. It's a lot easier if you, okay, I get it. Thank you.
Okay, we'll move on to Department 510, which is the landfill. Page 27, you'll see our personnel listed. We have 13 full-time personnel for the landfill, and we have that budgeted for FY15 and FY16 with no increase in personnel there. If you will move over to page 29, if you'll look at personnel services there, you'll see our personnel services in FY14 were $896,511, and they'll be going to $899,075 budgeted for FY15. Again, there's a lot of things with the health insurance, retirement, workers' compensation, makes up for just that slight increase in that area. Let's see, we'll look at, the next one is contractual services. Electricity and heating. In FY14, we budgeted $75,000. FY15, we've reduced that to $65,000. The main culprit there is, we are now allocating, electric, and the one right under it, 2120, water and sewer, both of those are being allocated to the maintenance area. So they're picking up where that decrease is there. You'll see that when we get Department 519, the shop, where we didn't have any money budgeted this year. We do have some budgeted for next year. Continue on to consulting and miscellaneous. We had 25,000 in FY14. That's line item 2415. We reduced that to 20,000 in FY15. Under that, Garrett and Moore does our AUF study. That's approximately about $15,000 a year, where they do the flyover and calculate the compaction we're getting on our solid waste and our C&D out there. So that's done every July. And then there's a few instances if we have, if a problem arises on a landfill or we need some expertise, something we're really not sure of, we've got a little bit left over there to maybe, you know, if we got a call on them. But very seldom do we do that, but we do have a little bit extra there. Engineering, surveying, mapping, we reduced that from 30,000 in FY14 to 25,000 in FY15. Again, if we need them down here for special projects, it could be the Brigman Company. If we need them to come out here and take a look some things going on any of our properties out there, we'll use that. But that's pretty much what that is used for. Line item 2430, contractual services, our waste tire disposal. We budgeted 150,000 FY14, 145,000 FY15. We're projected to have 100 tons less. If you remember, we bid that contract out about a year ago, and we projected, you know, to have some good savings in there. So we're looking, which we reduced it from 175 the year before to 150 in FY14. But with our tonnage going down, we look like we can cut that expense a little bit more too, to 145,000. So that's how we arrived at that number. Moving down to line item 3111, you'll see equipment M&R, the leachate. That's all the leachate pumps and the side risers that go around the landfill. Each of those pumps are roughly about $5,000. But any kind of problems that we have, those pumps are real old too. We've got a lot of our side risers have 3/4 horse motors in there. With the amount of rain we've had lately, we're finding out too, and the amount our trash is so wet, we really need to bump those up to a 1 horsepower motor in most of our side riser pumps. With that, we have to buy a new pump out there. Plus, this covers any of the expense. Anytime these pumps are repaired, you're looking anywhere from $2,000 to $2,500 to repair these leachates. They're sitting down in leachate day after day, and it's corrosion. They're stopping up the pumps on there, so it's a lot of repair that goes into it. But we have to keep that leachate moving and get it out of here. So, you know, our landfill gets older, our equipment gets older. It costs a little bit more to fix it out there, but that's one area that I see us increasing. I think we're going to bump our 25,000 this year that we do have in that category. Line item 3115, we reduced that, our grounds maintenance, from $15,000 down to $10,000. Part of it, we get a lot of help now from Dennis, our groundskeeper out here. He helps us out in a lot of areas out there, so we felt like with our need out there, maybe 15,000 might have been a little too much in FY14, so we feel like we can cut that down to 10,000 in FY15. The next item would be sustainment contracts. Line item 3130, that's our TM&R that we have on big equipment. Total maintenance and repair package, whether it be on a compactor, a track hoe, or a bulldozer. This year we had the 95,000 in there. Next year we're projected to right around 76,000. The reason for that, we put off buying a lot of equipment this year. As you know that, Mr. Campbell, we didn't purchase it, and some of the equipment we were going to buy, especially the compactor, that comes with pretty much an annual $30,000 TM&R package. So we didn't get that. Remember, we took the funds and we bought the grinder we needed. So, that's why next year, and once we put it out for bids, it's gonna be 6 months before we get a compactor in anyway. It takes that long pretty much for one to be built. So, we looked at a decrease right there. So our total overall contractual services, we reduced from 789,000 down to 729,000. Okay, let's continue on. Let me see where we're at here on, I believe it's on page 31. If you'll turn to page 31. If you look at materials and supplies, our budget this year was $162,975 FY14. Next year, we're budgeted $143,200. Couple things right there. Material supplies, we did bump that up, count 2220 from 45,000 to 55,000. This kind of a catch-all account. We get all our safety supplies, bags to pick up litter, gloves, vest, any kind of little supplies we need out there on the landfill. Like, again, that's kind of a catch-all thing right there. So we went over budget on that this year, so I think 55,000 will be a good number for that next year. And right underneath that, you'll see small capital.
Bill, you said you went over budget?
We went over what we had budgeted this year.
You went, oh, okay.
So I had to do a budget transfer to cover
Okay.
that.
Good. All right.
How much?
Right now, I think it's about 5,000 over, and we're gonna try to maintain that 55 this year.
Gotcha.
Right under that, you'll see small capital, where we went from 36,000 down to 8,750. Reason for that, we had radios budgeted for this year. We've got to upgrade our radio system. In fact, everybody here at the organization does. And we had 20,000 budgeted. It was going to be a small capital item this year. We won't be purchasing them till next year, but it'll be done under a major capital expense. I don't know if, Jan, you want to comment on that, but that's why it's no longer in the small capital. Moving down, page 32.
Before you go to that, line
Okay.
item 3116, alternate daily cover. When did we start using a spray mulch material instead of dirt?
We've been using, well, I know we've been using it before I got here. I've been here now 7 years. So I would anticipate we've been using it probably for at least 10 years. And a load of that is roughly about $32,000 to get it in here. And 2 loads, we can pretty much squeeze out a full physical year.
Wait, he needs to explain to you what this is.
Please.
Yeah, well, right now we're using Posi Shell. We had put it out for bid. I think it was about 6 months ago. Prior to that, we were doing ProGuard out there. It's approved. You have to have it approved by DHEC. We put it in our sprayer out there. It's mixed up each day. And then you go out there and the trash is compacted and try to get it as firm as you can. And we'll spray it with our hydroseeder out there, and you cover the whole waste. And really, you want to get this on there where you can see the waste, but if it's brown or if it's blue, whatever color we use, you want to see a good cover on top of that.
See, you do that for the night. You
Okay.
finish in the afternoon, you spray that to get through tonight.
And one thing it allows you to do, when you come in the next morning, you don't have to pull your dirt off. You can start putting garbage right on top of it. So, in the long run, it's going to help your compaction number out there too.
Yeah.
Where if you got dirt on there, even if you come in each morning and you rake it off, you're bound to leave a little bit on there. But with the spraying it with the Posi Shell or the ProGuard, you got garbage on top of garbage.
Ease your mind, Bill, when do you come back and put dirt on it?
That was my next question.
We have to cover, you cannot leave this on more than 24 hours.
Okay.
So Monday through Friday, we're spraying each day. Saturday, when we go, we have to put dirt on there. We can't, you can't spray because we're not open on Sunday. You got a 48-hour period. So we have to put dirt on it
So
then.
you do have to put dirt on
Right,
it.
and then when we finish a bay or a cell, we've got to make sure we've got some cover on there also.
Okay, because I'll take your word for it, but I can tell you now, DHEC doesn't even do anything for me, but just because they approve it. Not at all. So I'm taking it that you don't
Right.
have any problem with it.
No, ma'am, it's worked good for us. Again, it's, you know, there's different methods out there people use. They'll put they put canvases on there, or, some people put dirt on there. It's very expensive to put dirt every day. We've had to truck in some dirt before, and I think that account we were talking about, we had to go grab about $10,000 at that time to use it. But I can appreciate your comments on DHEC. At the same time, we have to have it approved by them before we use
Right,
it.
right.
So
know
I wouldn't
y'all
dare-
do, But DHEC's approvals, they're not strict enough by any means for anybody. So I would just like to make sure, if it's been used 10 years, then you have a good idea of where you might have a problem with it or what you would need to do.
Right, and prior to changing, I will tell you this, the inspector came out, we had 3 people come out and do demos, and the inspector we had at the time came out and watched all 3 demos, and she did a report back to her bosses in Columbia. And also, she would come out one time a year and visually watch us spray in the afternoon. So, they did have some oversight on it. And then again, once we got ready to change what material we were using, I have to send a letter to DHEC in Columbia asking for their approval.
Okay.
How much was it a load, Bill?
It's about $32,000 for a load.
If they didn't do that, what they'd have to do every night is to cover it with dirt and then come in early enough in the morning to take the dirt off the top of it before they could start the work, before they could start accepting waste. If they did not do this with this material, they can come in and start the work immediately.
It's more costly to put dirt on it and then have to take it off the next morning.
Yes, sir.
Soil is more expensive, plus you gotta rake it off. And also, when you're putting the garbage on garbage, it takes away a lot of the chance of leachate sitting up on top, where all that juice and all will kind of filter through the garbage, and that dirt and soil won't stop it up, and you have any kind of ponding up there of leachate.
Right. Well, I'm sure it'd be a lot more expensive to do the dirt unless there was a major problem, and on the opposite end, it cost you a lot more to take care of it because you didn't have the right thing.
That's correct.
Okay.
The key to this thing is this is a daily cover, not a final
Not a final.
cover.
That's true. Okay, let's see, page, let me see where I'm at here. Yeah, page 32, account number 3120, our business and travel in there, excuse me, let me just go back. Our business and travel in FY14 was $636,000, FY15 $677,000. Biggest change right there is account 3120, our fuel and lube. We budgeted $610,000 in 14. We've got $652. Last year we did the budget, we estimated about $3.50 a gallon. Based on some numbers I've gone looked at on the internet on fuel and all that, it's $3.75 is what we've used for diesel here. Looking at, the short term, I've analyzed each department, gone through what we've used in the last year. Of course, this does include hydraulics, motor oils, antifreezes, anything like that in there. But the short-term outlook ranged from $3.79 all the way up to about, let's see, that was the highest. The lowest was like $3.68. And again, it's like we said in the beginning, it's a guess. We don't really know what fuel's going to do, but it continues to go up for us here. So anyway, hopefully we'd have something left over there, but that's kind of out of our control.
While you're at the fuel and lubrication, do you buy that wholesale and have your own tanks?
We do. We have 3 tanks out there. We have 2 10,000-gallon tanks, one for the highway fuel, one for off-road, which most of that's used on the landfill, and then we have a 5,000-gallon unleaded tank out here, and we buy it in bulk.
Okay. Do you bid that out? Does somebody bid on that?
We normally check 3 prices before we get every load.
Okay, thank you.
We, one thing on that, we started looking at the state contract on that, excuse me, and we called on that for about 2 months, and they were high bid every time. So, we've got 3 local dealers, and before we buy a load, we call all 3, and whoever's the cheapest gets to bring it to us.
And that's per load.
Per load.
Per load.
Yes, sir. We don't say for 6 months or 3 months. You know, we need a load of off-road fuel about every 2 weeks, so we call all 3 vendors. And it's amazing, you'll see them change in there, just depends, I guess, sometimes availability for them, you know, inventories, what have you, but, and one last thing in Department 510, if you'll look, we're still on page 32, the depreciation of equipment. FY 14, 648,000. Next year, 662,000. Excuse me, 405, I'm looking at the wrong one. 462, and then next year is 405. The big reason for that, we didn't purchase a compactor. We had a trommel screen scheduled for this year, which all those things have been put off, so we won't be paying depreciation on them. Any questions on the landfill division?
Bill, you don't have any unfunded positions in that department, but the overtime's a pretty big increase, and also contract laborers is a pretty big increase. Can you address that?
The contract labor, yeah, right now, we're not getting any inmates at all. And the contract labor there, I think we went from 11 to 15,000. So I'm having to get temps in here to help pick up the litter out there. That is part of our inspection every month. When they come in, they look for blown litter. So we've got to do that. The other, with the overtime, sometimes we have some time-sensitive things. We have unforeseen emergencies, kind of like our ice storm right here, where we've had to have people in for the weekends and grinding. And sometimes just to meet the demands on the landfill to keep us in compliance out there, you know, we've had to do it, and we've had some equipment go down. So we try to monitor it best we can. You know, I mean, that's not something we want to do every day, but just from time to time, things come up which, you know, force us to try to keep the operation running smooth out there.
Thank you.
I have some questions, please. On the, of course, Garrett Moore, we spent a lot of money with them for obvious reasons, but there are other engineering and environmental consulting firms that we do business with, and they're vendors to us. They don't show in this budget right here. Where do they show the fees to Garrett and Moore and other engineering and environmental consulting firms?
Any of the engineering costs are gonna fall in each department under their engineering. Trying to find bills.
They're not in this department.
Yes, sir, he's got some engineering costs in this department. Under,
24. 2420.
2420, yes, sir.
What page?
Page 30.
Page 30. All of his engineering costs,
Well, those are very small in comparison to previous years. Would that include Garrett Moore?
yes, sir, Garrett Moore would be in that one. Now, that's for that department. He's got engineering in other departments as well. There's some in Department 504 that he already went over. In the property management department, there's some engineering costs. Which is back on.
Is there
What particular costs are you interested in? Are you interested in the total package of Garrett Moore or just individual areas of his consulting fees?
Thank you. I was going to go there rather than take up board time. I know in 11, 12, and 13, we spent $1.6 million with Garrett and Moore based on the check register. And then we have other consulting and engineering firms. So what I'll do is ask for an appointment with you, and we can go over. We should be greatly phasing out of Garrett Moore because we're through with planning all that piggyback stuff. But I know we have to go through construction.
Right.
But Pam, we've been using the same engineering firm, Garrett Moore, for about 10-plus years. And I have no reason to believe they aren't a fine firm, but for the same reasons that you suggested that we receive bids from other auditing firms, we might think about going forward, because that's the single most expensive and important thing that we do is estimate what is it going to cost us to finish out And I know when, Mike, when you had Mike Lloyd 2 years ago do a kind of an overview analysis, he said we were coming up short by some $2 million based on his analysis of, in other words, we were not escrowing enough money. Somebody else might, now that was not an in-depth study. I'm just suggesting a couple of things. I would like to know, where can I get a view of all of our engineering costs? And we can talk about that later.
Yes,
I just know that one is very expensive, and we have others. And then the other thing is, Mr. Chairman, I just floated as a suggestion that at a future date, that we talk about as a policy, that we do a 3-year or a 5-year or whatever is appropriate request for proposals from other engineering firms, to include Garrett and Moore, to provide the kinds of services that Garrett and Moore has been providing for us for, how long they've been with us, Danny, some 10 or 15 years?
10 at least.
I think
Yeah.
since about 2000.
I know Vance has worked for 2 different firms, but he has been the lead engineer, and maybe 3 different firms.
When you do that on how much we spent on engineering and which ones it was, I'd like for you to break it down and what they've done.
okay,
And I'd like a copy of that.
okay.
Now, Mike Moore was the consultant that we brought in, and he had been in the industry for years and years, and just checking to see what we already had been
You would.
told that we were, right? And that-
Yeah, we just had him to come in and verify the numbers for the closure and post-closure account, and it was about $1 million short. What he estimated, but we felt like that we could make that money up and did not ask to increase the amount of closure and post-closure we was putting into the fund, because we thought we could make it up in compaction over the years.
Right.
Have
That's
you
what I
been
say,
doing
the,
that?
Sir, ma'am?
Watch it.
Any
Have you been doing that?
any of those projections that we use.
Just a minute, Dan. Pam has the floor, just a
I'm
minute.
sorry, I didn't hear.
Have you been doing that have you been making that up over time with the compaction, or is
Well,
that not?
we keep increasing compaction every year, and the higher the hill gets, the more the compaction will get.
Okay.
Because you've got more push down on it, and we didn't want to take a drastic move and make those increases in those things, of closure and post-closure, and not need them when we go to piggyback. We'll review it again when we go to piggyback and see where we are at in the system, and at that point in time, we'll ask the board to make any adjustments at that time.
Okay, thank you.
Let me ask a question, just consider me dumb in this area. Why would you change engineers in the middle of the process?
Well, it would have some downfalls to it. The new engineer would have to get used to the landfill, how it was engineered in the past, and bring up some historical information. So there would be some lag time in them getting the ability to do that. And that,
Is an engineer for the project like getting an architect for a building?
yes, sir.
All the engineering firms are basically about, use the same percentages though, unless we ask for specific quotes. But most of them are about the same dollar value, or they quote you the same numbers, basically, right?
Bill probably could answer that better than I do. He deals with engineer more than me.
Depends on how hungry they are.
Okay.
Okay, but you wouldn't rebid in the middle of a project. You'd wait until that project was done
Oh,
and then put
no.
out a bid for something else.
Well,
Okay.
to give you an example, as part of the piggyback expansion, the road that we're currently building and the closure, Garrett and Moore's been working on that thing over years to get it to this point. If you had a new engineer in, you'd have to start over, and then it would be some additional cost associated with it.
Okay.
My turn?
Yes.
Yeah, I certainly would agree with you that you wouldn't want to change an engineer in the midst of a construction project, but I do have reason to believe that we're coming to a point to where it might be worthwhile to at least consider putting out a request for proposal. It's just a suggestion on my part. I kind of see where it's likely to go just based on the discussion here. same place most of my suggestions go. However, I'd like for it to be on record that I suggested it. By the way, Pam, Mike Lloyd worked for Waste Management, and in between jobs, he was with a consulting engineering firm. And Mike was able to speak to him at a SWA convention. And Mike Lloyd, when he was with the consulting firm, did this overview study where he was, in effect, critiquing, in a broad sense, Garrett Moore's projections about how much money we needed to escrow. And it came up, I'm sorry, I misquoted, it was, you said it was $1 million short instead of $2 million, I'm sorry. Mike Lloyd now works for Republic Services, who is in charge of Lee County Landfill. I know you've heard of that before.
I asked you, but I said Mike Moore, yeah, Mike Lloyd is the correct name, yes.
Yeah, I'm sure you know, Mike's a registered professional geologist and very well thought of in the industry. So I can work with you and get a handle on the total of engineering fees, and of course, Pam may be interested in knowing the same. We might even meet together, the three of us, if you want. Thank you. Thank you, Mr. Chairman.
Okay, we'll move on to Department 511, which is our yard waste department. You'll see on page 33, we have 2 employees for that department, an HEO 2 and an HEO 3. That's all our wood waste that comes in and grinding there. That was page 33. If you'll turn over to page 35, we'll look at some of our line items under personal services. We had budgeted this year $109,874. Next year's $110,229. Just some small increases in there. That's roughly about $500 over the next fiscal year. If you go down to contractual services, you'll see the big one, $84,257, and next year $142,261. The big increase there is we now have 2 grinders. And in order to keep 2 grinders in operation, it's going to cost more money to fix them every day. We're wearing out teeth and hammers and screens and all. So it'll cost a lot more to keep both those grinders up and running. But
How's your grinder doing, the one you just purchased?
it's doing well. Just to let y'all know, one of the big things that's happening right now with the storm debris coming in, people are throwing away a lot of like metal, tools. When they're going to clean up an area, they're dropping that in the load, and then when it gets in the grinder, of course, it causes some problems and tears up teeth. You have to stop, go back in there and weld new ones in or bolt them in, replace them. But we're fighting that right now. Everybody's in a hustle to hurry up and get that stuff off the street. They throw whatever in there, and when you grab it with that track hoe, you're not sure what all's in there. And when you go through the grinder, and then it's tearing up some things in there. So
Just go home tonight and turn your blender on and drop a spoon in it.
your garbage disposal, that's a good one right there. Yeah, that's what has a good analogy right there.
Before you go to the next page, 1110 overtime, in 14 it was 1250, and you're projecting 5,000?
We now have, our grinding materials have picked up, especially in the clean wood that's coming from the processor over there. Mike's gonna talk about that a little bit later on. But, you know, we do have grinders go down. It takes a lot of time. It's estimated, in looking at some things I looked at, pretty much you run a grinder for 6 hours, you work on it for 2 hours. That's pretty much industry standard out there, looking at different things on the net, calling different companies out there. So it takes a lot of time to keep them in runnable condition. And then but you're down every day for 2 hours or average that out, you got to try to make that up. And if you go out there and look at some of the material we have now from the storm, I mean, we've got a lot of catch up to do out there. So just feel like, you know, to have that budgeted. I know last year we pulled some of that out. We had more than that budgeted, and that, for what's showing in there right now from FY14, is pretty much 1 quarter. We had the same 5,000, but staff made a decision to just put 25% in there and that way we could manage it and monitor it a lot better and keep a closer eye on it.
That's where you see the overtime contingency in the 999 number department. That's the overtime contingency. A lot of the overtime is in that budget. In FY15, it's not been put there yet,
Yeah.
but it was put there in FY14, part of it.
Well, I guess I'm asking again in this particular part of the budget, but throughout the whole budget, throughout here, I've noticed that there are like thousands and thousands of hours of overtime. And supervising 1,000 people at one time in my previous life, in different states and places, overtime is very costly. And I know that if you have something like a grinder or whatever, I guess that you have to have a particular skill to work on it, obviously, and use it, that you would need the same people you have trained and know what they're doing on that. But I guess I would just say with the holidays and normal overtime or people doing things that it's not a skill related to, which really doesn't affect your particular division, there are people that furnish people at $8-10 an hour to do things, and they pay their stuff. But have you ever added up, and I look at things over years, and when you look at things over years, you look at a lot of money. Have you looked at doing it from another standpoint than you paying overtime?
Well, excuse me, when we've gotten people in here, and you're gonna pay, to get somebody to operate a piece of equipment through a temporary, company that supplies folks to you. To operate, you can get an $8 person to pick up paper out there.
But that's what I meant. I knew the equipment people, you don't want to do that
No.
or pay them.
And really, I mean, if you get them, the last one we got, you're gonna pay for their hourly rate $12 to $13,
Yeah.
plus you pay another 50% to the temporary company
Yeah,
on top of that. So you're pushing $20 an hour
okay.
for them right there. And if they come in, you've got some training, they may not have the skills.
Yeah.
They may be where they can only do one thing, where our folks out there are multi-talented.
Right.
They can work in a lot of different areas.
I was just thinking, if you added up the overtime in a year and what it cost you, it might be better to put on another person or another few part-time people that would actually bring that cost down. I don't know if you've ever looked at that or not.
Yeah, we've looked at it. In fact, some of the places where we've cut people at, we may have to increase the overtime, but because you've reduced a $50,000 benefit employee, adding $5,000 or $10,000 is not a big issue because you've actually saved 40.
Yeah, okay,
Sometimes overtime pays and sometimes it don't.
okay.
Temps, let me see if I understood this right. Temps, run you $20 an hour?
If you get one to operate, not on the processor
Okay.
out there, they're $8 an hour, but if you get someone to do a bulldozer,
Right.
off-road
Okay,
truck,
yeah, okay.
Yeah,
we're looking
yeah,
between,
Skilled person, I'm
the,
sure.
the least expensive I could find is between $12 and $13 to pay the employee. Then the temp company puts on 50% on that, so you're
Right.
pushing $20 an hour for those folks. Okay, continuing in 511, if you look at business and travel, we had $89,000 budgeted for this year. Next year, we have $115,000. Really, the increase is in fuel and lubes. Again, the cost of fuel, using $375 for FY15 versus $350 for this year, and also having 2 grinders out there. That's the reason for that jump. And looking down at depreciation, pretty much what I said, that depreciation jumped from 135 to 211. We're paying for 2 grinders out there, depreciation on 2 pieces of equipment. So, any questions on Department 511, our grinding operations out there?
Ken, do we have an accumulated depreciation account set up?
We do have, I don't have it in here, sorry, I don't have it in here, but it will be in your complete packet. We have the equipment replacement schedule that'll have
Yeah,
everything in
just
there.
a general question, based on the nature of our business, we got a lot of expensive stuff to depreciate, so that year after year, it must build up pretty good.
Yes, sir. Now,
It's almost like a restricted fund account.
no, I'm sorry. What were you saying, sir?
It's almost like a restricted fund account. You have to, you would hope that you would have money in there, so when you go to buy a piece of equipment, your depreciation, that's the whole purpose of depreciating stuff.
That's exactly right, to replace
So,
it.
but we have an account for that too.
Yes, sir.
So we're kind of funding it twice, in a way.
Funding it twice?
Well, once with accumulated depreciation. And then once with a charge, from time to time, a quarterly charge goes into various restricted fund accounts to include equipment purchases. Am I right?
The depreciation fund, this is how the depreciation fund works. We buy a piece of equipment tomorrow. Let's say it costs $100,000 and we say it's gonna last 5 years. Every year we budget $20,000 a year to go in that thing. If we did not budget the money to go in that depreciation account, at the end of 5 years, we'd have to come up with $100,000 to buy it with. But we spread it over 5 years and put it in a little bit every year where we'll have enough at the end of the life of the piece of equipment to do it. That can go the same thing as a compactor, an $850,000 compactor. We depreciate it over 5 years. We couldn't come up with $800,000 in 1 year. So we have to
I
fund that
understand the reason for
that depreciation, but that's the only money goes in that depreciation account.
Yeah, I understand the reasoning for it and fully support that, of course. I'm just saying, we have, I just don't remember seeing, that doesn't mean it's not there. I just don't remember seeing on our balance sheet accumulated depreciation funding for various departments, but you can show that to me.
We've got a designated account. It's a designated account called equipment replacement. If you look on your balance sheet, it says, it's under those designated accounts.
The designated account is just another name for accumulated depreciation?
It's for exactly, yes, sir. It's called equipment replacement. Yes, sir.
And sometimes we actually kick it up a little bit if we got some money. Seems like.
No, sir, we've never transferred any money in there. The only way it ever increases is through interest. We do put interest back into that account. But that's the only way. We don't ever do any transfers into that account.
When we get to that, you can point it out to me, please. Thank you.
Okay.
And how do we spend that money?
That money is only spent when we purchase new equipment.
Right,
Yeah, it was approved by the board within that capital budget.
right.
When we get to the capital budget, everything you see with an A beside it is coming out of that fund.
Okay, we'll move on. Department 512, Construction and Demolition Department, page 37. You'll see we have 3 employees assigned to that department, a trades worker, HEO2 and an HEO3. Moving over to page 39, under Personnel Services, we've got $146,700 budgeted in FY14. FY15 is $167,25. Again, we've got a little overtime increase there. It looks like the biggest increase is health insurance, going from 17 to 28 in that department.
Is that the factory? Is that what?
No, sir, that's the C&D Hill out there where it's disposed of. Out there, we got MSW and C&D.
Oh,
So
okay.
that is the actual C&D disposal cell out there.
Thank you.
Continuing on that page, contractual services. This year was budgeted $30,290. Next year is $25,302. Reason for that, the equipment maintenance, line item 3110, we reduced that from $25,000 to $20,000. We're going to be putting another compactor over there that's a little bit newer. This year didn't look like we were going to spend quite $25,000, so I felt like we could reduce that to $20,000 over there per month. And my iPad is froze up here for some reason, but there we go. Anyway, so we got that. Moving on down to business and travel. That'll be on page 40. We've got $133,000 budgeted for this year. Next year, it's $123,000. The difference is in fuel. We're going from $130,500 to $123,992. took into consideration, we're going from $3.50 a gallon to $3.75. But also I felt like with the loss of C and D, a lot of it going up there, 30%, due to the flow control going away, the compactor probably won't be working quite as hard. And also, I think I overestimated what our fuel usage was probably gonna be for FY14. So, again, we've done a pretty good analysis of what we've been, using up on each of our departments there, so I felt like we could cut that $10,000. And moving down to depreciation, right below it, you'll see account or line item number 4220. FY14, 75,400. FY15, 0. The compactor that we're gonna be moving over there is completely depreciated. So we won't have any depreciation in Department 512.
I have a question that's similar to the question I asked earlier, Jan. Under this 4510, that's to add on to our landfill, new landfill construction.
That's correct, yes, sir.
On the restricted funds things, it might not be called depreciation, it might be called something else, but
It's called landfill construction, under the designated accounts.
yeah.
Yes,
And
sir.
it's funded by this depreciation number here.
That's correct, yes, sir.
Thank you.
Okay, continuing on, Department 513, which is the C&D recycling department, the processor, the factory, as it's referred to. Page 41, you'll see we have 3 positions in there. One of those is unfunded. So we actually only have 2 funded positions in the processor over there. We'll move over to page 43. We'll look at personnel services. This year, we were budgeted $147,917. Next year, $99,642. Again, the difference in the drop is we have the unfunded position. There's a few increases, small increases in other areas, but pretty much unfunded position right there. All right, let's move on to contractual services. Line item 2130. As far as contractual services, we've got $347,000 budgeted for this year, $350,000 budgeted for next year. Tip and fees, took that from $160,000 to $170,000 in FY15.
Excuse me, Bill, what page are you on?
We're on page 40.
That's on 43.
43, excuse me, I got too many things going here. 43.
Might have a different.
It'll be line item 2130, tip and fees.
Okay, thank you.
Increase that from $160,000 to $170,000. Reason behind that, with the flow control going away, in order to keep our tonnage up, our processing tonnage, we've taken in over 1,000 tons. In order to keep that up, we're gonna have to take more loads that have more rejects in it. And of course, we pay for our rejects right now. They go up to the C&D hill. So, we want to keep the same amount of tonnage being processed up there every month, whether it's 1,100, 1,200 tons. But in order to do that, you're going to have more rejects in your load, more plastic that we don't, whatever it might be. So anticipate we having more that we got to pay for right there.
And that's just an in-house transfer. You don't actually write a check from one department to another.
I don't write any checks.
Right.
We do write a check for that, yes, sir.
Well, okay, but it's
We write a check to ourselves.
factory paying the hill
That's right,
for what they dump over there.
that's correct.
Thank you.
But we do actually write a check for it and deposit it to ourselves.
Line item 2434, a couple items down, contractual service, our laborers, we reduced that from $155,000 to $150,000. Continuing on down to business and travel. If you look at fuel, this year we had budgeted $18,500. Next year's $46,881. The fuel is the big thing there. Again, we budgeted last year $3.50 a gallon. Next year it's $3.75. Also, we had some other equipment that we've allocated from other areas that we moved over to the C&D processor, especially the skid steer. So that's caused our fuel to go up over there. And our roll-off truck, I don't believe we had probably allocated to it last year, and our roll-off truck takes all the loads to the C&D hill, to the wood pile, wherever they might go. So we pay for all that fuel right there out of the C&D processing department. That's pretty much it. Our budget over there, grand budget totals, went from $640,000 down to $620,000 over to processor. Any questions on that department? Okay, lastly, for the landfill division will be on page 45 is our maintenance department, department number 519. On page 45, you'll see where we have 3 people budgeted: fleet manager, heavy equipment maintenance tech, and a mechanic. We'll move over to page 47, where it has the breakdown of the different departments. Personnel services, $231,000 for this year, $245,000 for FY15. Again, you'll see the overtime in there, the health insurance, the workman's comp, just a little bit in there. So that pretty much, again, 231 to 245 in personnel services over in the maintenance department. Moving down to contractual services, electricity and water and sewer, just combining those two right there. If you remember when we were doing Department 510, where we reduced it from 75 to 65, we're picking up a lot of this right here, this 6,000 and 1,000. It's now being allocated to the maintenance department instead of all of it being in the landfill department to get a more true cost over there, what we're doing. Most everything is pretty small. Our materials and supplies went down over there. We found we're just not having to buy a lot of the stuff that we get actually is for the landfill department, not the maintenance department, so we were able to reduce that from 5,000 to 3,000. And at the end there, you see our fuel. Our fuel's going to remain about the same. We're not quite utilizing as much as we anticipated this year for the maintenance department. And last line item, 4210, depreciation on equipment. The reason for that increase, we went from 5,100 to 10,250. Our service truck in there, we originally had in the budget for 10,000 out, or 10 years, and we've shrunk that down to 7 years. So we're having to pay a little bit more depreciation each year for the 7 versus the 10. So that's why that's increased right there. Any questions? I think that pretty well takes care of the landfill division.
Good job.
Bill, I know we hit on overtime several times, but it looks like in each of those different departments, it was kind of increased fourfold. Was that the formula, just we were gonna multiply it by 4?
What you see in the budget is 25% in FY14. We did have more in there, and then again, we met as a staff, and we agreed to put it over in that overtime contingency fund to kind of, so we could manage it and monitor it a lot closer instead of just having it all in there. So, I mean, I would assume maybe staff will look at that same program again this year, what we want to do.
Thank you.
If you took what, Mr. Thompson, if you took what was out of the overtime contingency up under Department 999 and put it back in those budgets, in FY14's budget, it would be comparably the same.
Okay.
Okay, it's my turn. I'm going to review the Recycling and Corporate Affairs Division and those departments within it. We're going to begin on page number 49 with the Public Education Department. That department consists of 2 employees, 2 recycling coordinators. On page 51, we'll review our detailed budget. Under personnel services, as Jan indicated earlier, the increases there are primarily due to increases in the various benefits. Fiscal year 14, there was 109,738 in that budget, and it's increased to $115,083. Under contractual services, fiscal year 14, we budgeted $26,307. It did go down slightly in our proposed fiscal year 15 budget to $25,859. Under our materials and supply,
Excuse me, could I ask? a
yes,
question?
sir. Mhm.
What do we use those GPSs for?
The contractual service for GPS is now, each one of the trailblazers that the recycling coordinators drive have a GPS on the car. So it pretty much locates that vehicle wherever they're at. And what we've learned in the past is that assists us when it comes to different planning sessions and things of that nature. We'll know exactly where they're at any particular time. There has been an occasion when we couldn't locate a recycling coordinator, not because they were off doing something that they didn't need to be doing, but because they were in a meeting. And one of my pet peeves is that your phone rings in a meeting, so I always ask them to shut it down. And it was a Friday afternoon about 6 o'clock, and I couldn't find them. So I was a little concerned, but it happened that they were in a school meeting. But we could locate the vehicle to know that they were safe and everything was sound. They also do a lot of work after hours. So it's almost more protection mode as opposed to tracking mode.
You just a mama hen. Look,
I am,
you're-
and I'm not ashamed to say it, I am. But it does help with us in
Thank you.
coordinating their activities. Under our supplies and materials, in fiscal year 14, the overall budget there was $54,150. We're proposing a budget of $58,200 for fiscal year 15, and that increase is primarily due to an increase in small capital. That would be line item 2222 on page 52. You'll see there we're budgeting for a storage building and concrete pad, and that would be for the use and storage of the items that they use for business recycling or school recycling, roll carts, recycling bins, compost bins, things of that nature. Currently, we're storing it wherever we can find a spot, so this will help us to be able to control inventory. On page 53, under business and travel, there was just a slight decrease of $100 in that area. And our equipment depreciation would be for the two trailblazers that the employees drive, under 4210. It's gone down in fiscal year 14. Budgeted was $4,852. In fiscal year 15, you see that zeroed out, and that's because those trailblazers have been fully depreciated. So overall, our fiscal year 14 budget was at $203,947. Our fiscal year 15 proposed budget is $207,942. It's about a 2% increase. Any?
Kendra and her,
That's Kendra and Miss Victoria Johnson, who was
Victor, right.
just recently hired.
They do a great job, I'm telling you.
Thank you, I appreciate that. I think so too.
Where's the TV money? Which department is TV?
That will be in the next department that we go to, Department 505, which begins on page 54. If there were no other questions on 503, we're good. Department 505, which is the Corporate Affairs Department, consists of 2 employees, myself and Ms. Cecil Terry, our administrative assistant. On page 56, our line item budget begins. Again, the increase in personnel services is due to increases in benefits. In our contractual services area, there was no increase. We budgeted $161,123 in fiscal year 14, as well as proposed for fiscal year 15. And Mr. Gray, if you look on page 56, line item 2325, promotions and public relations, that would be where we would have any advertisement, whether it be TV, newspaper, things of that nature. And it remained at $139,000 as it is for this current year. Previous to that, in fiscal year 12, that amount was $207,000, and in fiscal year 13, it was $209,000.
I know you've come way down on that,
Yes, sir.
but also your quality, the ads are very well done. And I know you're working in a different way, but I've noticed there's an emphasis on getting people to recycle instead of talking about what a great organization we are. And I'm not saying we aren't, but the purpose of it is to get people to recycle. And I think that the new ads are very well done, and I know you're using less money. So congratulations. Thank you.
Give me that FY 12 and FY 13 number again, please, ma'am.
FY 12, $207,000. FY 13, $209,000. And that was what was budgeted, not what was expended. And if you ask me what was expended, I'll have to get it back to you. But that was what was budgeted.
$50,000 more than that.
It was 50,000 more?
I would disagree that it was more. I'm a mother hen and a tight budget runner, so I'm sure it wasn't more than the 2.9.
Anyway,
Well,
the
we can
point is
use-
that it's a lot less, no matter which
Yes,
number
sir.
you start with, and it's done very well.
I
Well,
will
we can
appreciate
use more advertising, I'm telling you. We need to build it up as much as we can on the recycling as well as the solid waste.
We have, and just as a side note, the advertisements that are running now on television in particular are ones that have been in effect for about 4 years. We've decreased the amount of funding that goes towards television advertisement and have been very selective in where and when we're advertising on TV. And if at any point in time we can run public service announcements, that's what we attempt to do, as well as run on public access channels and things of that nature. So we're very selective in placing of the advertisements. Okay, under supplies and materials, in fiscal year 14, we budgeted $6,900 there. And our proposed budget for fiscal year 15 is $9,900. That $3,000 increase is related to the budgeting of a computer replacement for the upcoming fiscal year. Under business and travel, that level of funding has remained the same at $4,000. So overall, in the corporate affairs department, in fiscal year 14, the budget was $356,294. Fiscal year 15 proposed budget is $364,132. If there are no questions, we'll move on to the material recycling facility. Begins on page 58. That is the MRF budget. You will see there at the MRF we have a total of 7 full-time solid waste authority employees. We also utilize a staff of contract workers on the processing line. There are 13 contract workers. We also utilize 2 contract workers for the processing and packaging of electronic waste, and they're used, there are 2 workers that are used 3 times a week. And then we also have 2 skilled laborers who are capable of working on the processing line and are able to operate small equipment such as skid steer loaders or forklifts. And you'll see the cost for the contractual staff within the budget. On page 60 begins our detailed line item budget. There's the increase in personnel services as discussed earlier. Under our contractual services, our fiscal year 14 budget was $1,101,451. Our proposed budget for fiscal year 15 is $1,221,355. That's an increase of about $120,000. The biggest portion of that increase is due to what would look like a new addition on the budget for, that's line item number 2439, contractual services, Republic. That's for Republic Services. In the fall of last year, Republic Services contacted us about accepting material that they were collecting in Charleston County, and we began accepting that material in September of last year. So where you see a zero number for fiscal year 14, it is because this did not start until September, so it was not in the previous budget.
What number is that? What line item?
It's line item 2439 on page 61.
21.
2439. So the $95,000 you see there,
That's not Republic Services, the hauler, is it?
yes, sir.
What do we hire? What do we get from them?
We get commingle recyclables out of Charleston County.
Oh.
Yes, sir. It's just the same type of material that we receive through Sunoco,
No,
we receive through Republic Services.
similar contract and so forth.
So the $95,000 there is to cover the transportation costs for the material to get to the MRF.
We're going to do that starting,
It started in September,
will start in,
this past September 2013. The reason you see a zero number there for fiscal year 14 is because it was not a part of the budget process for fiscal year 14. It was one of those additions that happened during the course of the year.
we didn't run that through the board, we just did it.
There's a policy that the board passed, I would say probably in fiscal year 12, that allows Mr. Knight to enter into these types of agreements without the board, without express approval by the board of directors. There's a policy the board passed for him to be able to handle that.
I'm just confused. We did it with Sunoco, and that was
It happened right after the Sunoco contract because we were getting those requests in from various, whether it was haulers or various entities saying,
I'm not
you
saying
know.
it's a bad thing, I just didn't
No,
remember that
yeah.
we were doing
I
it.
can get you a copy of the resolution,
I
the
think
policy.
before, you just said whatever we're doing with Sunoco, we're doing something similar with Republic.
Yes, sir.
We just have
You have a
standard
policy.
policy which says that, is there a dollar limit on that?
No, sir, there is not a dollar limit on that. It is at the discretion of the executive director.
I'd like to see that,
I'll get you a copy.
the 2012 resolution.
Don't quote me on that. I want to say it happened at about the fiscal year 2012.
I think it was before then, because you,
It may be, but yeah, it was.
you seem to know about it, Mike.
What happened was we had several entities coming in and asking could they bring material to the MRF facility, which is what, and the board approved for Mr. Knight to negotiate those agreements without having to come to the board all the time, because a lot of times, like for instance, Republic, Charleston cut them off at their facility and said, we can't take you no more. Well, Eric Sear with Republic called and said, I need to get rid of all this material. Well, if we'd have waited to the board and go through a process, we would not have been able to have time to help the private industry. So the board decided to allow, in situations like that, allow the executive director to negotiate those agreements.
I recall that, sorry.
And that's what this happened in this situation. Charleston cut them off. We negotiated an agreement to pay for the transportation costs for them to get here, for them to bring it to us.
Yeah.
And they bring us 2 or 3 loads a week, most of the time 4 or 5 loads a week.
Yeah, they're pretty consistent.
about a load a day.
Why did Charleston cut them off?
Their MRF couldn't handle the amount of material they were getting. Charleston did a good job in building a good recycling program and encouraging people to recycle, but they didn't have a place to get rid of it.
Okay.
I'm sorry, you don't need to give me anything. I do recall that discussion. Thank you.
The other portion of that increase is due to an increase in the line item for electricity and an increase in tipping fees. Under the supplies and materials account, in fiscal year 14, we budgeted $74,000. Fiscal year 15, we're on page 62, Mr. Gray. In fiscal year 15, we're proposing a budget of $79,900. That increase is due to an increase in our material and supplies line item account, which would be line item number 2220, which would be on page 61, bottom of page 61. And those supplies are basic day-to-day operational supplies, gloves, any personal protective equipment they might need, wire tie, just the general operational items that we use for daily operations. Under business and travel, yes, sir.
On contractual services, there's a summary number there of 1.1 million and 1.2 million.
Yes, sir.
Is that just an adding up of all of those
Yes, sir.
temporary people that we hire?
That would begin with, on page 60, line item number 2100, all the way through line item 3130 on page 61. So yes, sir, it's a subtotal.
That's just going through a labor contractor instead of,
A portion of that is for the contract workers. A portion of that is for the transportation costs for the commingled material that we're receiving from Republic as well as Sunoco. It covers the tipping fees for the rejects. So it's a lump sum of different contractual things.
It's in fact part of the cost of running the place. You
Yes,
just
sir.
choose to do it a certain way.
Mm-hmm.
While you're back on 60,
Yes, ma'am.
100 stormwater fees, $16,000.
Mm-hmm.
We pay the county 16, what is that
We
for?
pay the county stormwater fees on all of our property, and we also have to pay building permits and other things.
Yes, ma'am.
Is there a reason for that?
Because we're a quasi-governmental entity.
County makes this.
They send a bill. Yes, yeah.
Do you pay property taxes too? You do not. You do.
Still have to pay stormwater.
That's one of those cases where we're not a part of the county.
Okay, I think that bears some looking into. Thank you.
We're-
mentioned that before,
Have we?
no avail.
We're part of the county at their discretion.
Okay. It looks that way, doesn't it?
It is.
Okay,
And when they say we're not a part of the county, we're not a part of the county.
okay.
And when it comes to paying fees, we're not a part of the county.
We're not a part of the county, okay.
That's about right. All right. Depreciation, that would be on page 62. Line item 4210. Our depreciation for fiscal year 14 was $268,551. The proposed budget for 15 would be $270,851. That increase is related to the purchase of a new skid steer loader this fiscal year. So the depreciation on the equipment will begin next year. So that's
Do we appreciate the building?
the building is depreciated, but it's not depreciated through this line item budget.
We only budget depreciation, the only thing we budget for is equipment. We don't budget for depreciation of building.
Okay.
So that's
But we do for
But we do depreciate.
landfill construction, just not building construction.
That's correct.
And is there a 15-word answer for that? Or that's just what we do?
Well, the only time we can build a facility is out of the designated account that says construction and development. If there's no money in the construction and development account, we can't build a building. And the only way that gets funded is if we have extra money during the year, we put it, ask the board to allow us to put a certain amount of money in there. And that, if there's no money in that account, we can't build anything.
Okay, so that restricted account, sometimes it gets funded through depreciation charges, sometimes it gets funded through transfers.
Not that one. That one's only funded through transfers.
I got it. Okay, thank you. I'm learning.
Overall fiscal year 14 budget for the MRF is $1,885,986. Our proposed fiscal year 15 budget would be $2,046,139, and that is an increase of 8.5%. If there's no questions, we'll move over to the collections and hauling department. We have
In general, what would you say was the reason that we went up there?
The primary reason for that increase was the Republic Services transportation costs that was not budgeted in last fiscal year, which is now budgeted in this fiscal, or the upcoming fiscal year, for fiscal year 15. So that's a $95,000 increase there. And then some smaller or some other increases like to electricity.
That's right, our agreement with them and Sunoco is that you got to pay somebody to bring it up here or whatever. We reimburse you for that, is that what that is? Okay. We don't pay for it, but.
If we took that line item out, how much would we have to take out of income? A WAG.
You got that later.
They're probably bringing us around, Danny, about 50 tons a week. So you'd multiply 2,500
Yeah,
tons
it's
and a
about-
revenue of $150 a ton, so,
Yeah. Republic's bringing about, on average, about 200, they're both bringing on average about 200, 250 tons per month.
yeah, just Republic alone would be about $375,000.
So
How often?
we paying
A year.
money and getting this other on the other end, so.
So we pay 95,000, but we actually get 375.
In revenue.
So we're actually profiting about 280,000.
Well, it's not necessarily profit, you gotta take operating costs out
Yeah,
of there, but
yeah. Well, we're actually gaining more, almost 280,000 compared to what we're spending for.
it helps support the expenses of that operation.
Okay.
Less, whatever
Less,
our
less
operating-
operation costs.
Yes, sir.
Thank you.
Page 63 begins the collection and hauling department overview. There's a total of 8 employees in that department. That's the department that is headed up by Mr. Cannon. On page 65, within that 8 employees, there are 7 funded positions there and 1 unfunded HEO2, 1 unfunded driver position. And that position's been vacant since December. On page 65, our line item budget, you will see a decrease there for personal services. In fiscal year 14, our personal services totaled $504,692. In fiscal year 15, the proposed budget is $466,528. That's directly related to the unfunded HEO2 position. I will note that you do see an increase in overtime there, and that's because with that unfunded position, anytime we have a driver out, we have to cover that, those hours through overtime. Under contractual services, there's a slight decrease there for the proposed budget for fiscal year 15, with that budget number being $148,744. If you turn the page to page 66, under supplies and materials, fiscal year 14, the budgeted amount there was $25,350. For fiscal year 15, we're proposing a budget of $11,350. That's a $12,000 decrease. That's primarily due to, Bill mentioned earlier that we had initially planned to purchase some handheld radios to upgrade to a digital system. this fiscal year. However, that did not occur, and it's now been placed into our capital budget, so that equates to that decrease. Under business and travel, we've pretty much maintained the proposed budget at the same level as fiscal year 14, and that's at $262,500. Our depreciation, line item 4210, fiscal year 14 depreciation level was $108,178. Fiscal year 15 proposed budget is $67,586. That's a decrease of $40,000, and that's primarily due to us delaying the purchase of three pieces of equipment, one rear loader truck, one roll-off truck, and then our PAL body, which is a OCC delivery truck, the truck we use to deliver containers with. And we've pushed each one of those out over the course of the next 3 years. So that's why that depreciation number has dropped. Overall, fiscal year 14 budget for collection and hauling was $1,049,723. And our proposed budget for fiscal year 15 is $956,708, which is a decrease of 8.9%. That would be all for me.
Okay,
Capital budget.
capital budget. And I'm going to have you go over to page 70, which is the 2015 expenditures for capital budget. We've got it broken out by division, but I want you to if you kind of look at page 71 as well, you see on the capital budget, beside each item, we have a funding source listed. It's lettered A, B, C, D, and E. Anything with the letter A are those pieces of equipment that we'd be purchasing from that equipment replacement fund. Anything that we've been depreciating and that we've got in that fund, that's where that money would come from to purchase those pieces of equipment. As you see, we don't have anything coming from closure. We have no kind of closure project or anything next year being funded. Anything with the letter C is construction and development. As you see, we do have several things with the C on them. Those will come from that designated fund. The letter D is a designated landfill construction. And we do have, I think, just one thing, the leachate wastewater treatment facility coming from that. And then anything with the letter E comes from our unrestricted funds. That's what we call kind of our wish list, as we call it. Those would be things that we would purchase only if the funds were available to purchase. Sort of like I did the last quarter when I asked to maintain a little $60,000 in undesignated funds instead of transferring it so that we could purchase the cameras for the MRF as well as the butt welder. What would happen with anything with the letter E would be the same thing with those. We'd have to get permission from the board to not transfer funds if funds were available to be transferred to purchase any of those items. What we try to do after the budget's approved is we'll go through and kind of put these in order of priority. You know, so everybody kind of puts together what's top priority on their list. So that kind of gives you a breakdown of what's on here. As you go through and you kind of look, we've got several items on here that you'll see carryover next to them, where we've had them originally budgeted in 1 year and they've pushed them out maybe a year or two to not purchase them for a couple of years because they're going to try to maintain them. So they do that quite often with a lot of things. Every year they evaluate it and see if they can move it out a few years. So wasn't going to go through these line by line. I just thought if you have any questions, any one of us would be happy to answer any questions you may have on this.
Could I ask you one right now?
Yes, sir.
Can you, when you have time, you remember you were given an explanation, a little short explanation for A, B, C, D, and E?
Yes, sir.
Treated differently depending on the letter. If you could just email me the same sheet with those.
Okay. If you look on page 71.
I am on 71.
You are, okay. I started saying, because it is right there. That's not, those A, B, C, D, and E, that's an explanation of those, but I've been more than happy to put something else together for you.
Well, you said A means this and B means this.
Yeah.
Prior page, it's got that letter beside it.
If you go back to page 70.
You already did it.
Yeah, if you go back to page 70, all those letters that are down the side correspond to page 71.
tell what fund that money's
Come-
coming out of.
That's right. For instance, if you look at the addition to the store, which is funding source C, that's coming from the Construction and Development Fund, over on page 71.
Okay, so, the way I do it is work these two sheets together, and
Yes, sir.
A money comes from wherever you find A over here.
That's exactly right. Yes, sir.
Okay,
A money comes out of the allocation for equipment replacement fund. And you see where it says B money, designated closure fund.
okay.
Right.
D money comes out the designated landfill.
I just need to study it a little bit more and catch up with it. But what you're saying here on this sheet is that roughly $4.2 million will be, what will happen to it? It will be spent?
Well, these are, not necessarily, these are what we've got budgeted for capital. The only items that have designated funds, like the equipment replacement, the construction, landfill construction, and the construction development, those funds are already set aside for those purchases. So those, and once the budget's approved, those items could be purchased. The only things that will not be are anything with the letter E that's coming from the unrestricted cash funds. Those items would not be purchased unless the funds are available on a quarterly basis when I look at it and I do the transfer. If we had any money to transfer and we determined that we wanted to use some of that money to purchase some of these items, then we would. But any of these other ones already are being funded from our designated accounts, that money that's already been put aside.
Will this appear as a line item, this $4.2 million, somewhere on our balance sheet?
It doesn't appear as a line item, no, sir. Like I said, you'll just see it with those designated accounts. If we purchase something, it would be reducing the designated account.
Okay. I'll try to understand it without taking the board's time in another way.
Explain how the monies get into the fund.
The money is set up in those designated accounts based on transfers, or except for the equipment replacement where we put the money aside based on the depreciation schedule. But like I said, so therefore, the money's already been put aside for, like I said, for the equipment. The money's been put aside for all of those purchases of all that equipment. For the construction, we've got on here, if you look under, we've got timber and clear the green sea tract for $150,000. We've got the letter C next to it for construction and development. We've been putting money aside through transfers into that construction and development account. And so now, if, once the budget's approved, if Bill decides to go ahead and do that, and he's got the money already available to do that by taking it out of that designated account. So where you would see it is you would see a reduction in that designated account, once we paid for that. That account would be lowered because we used money from that account to pay to have this done. Same thing with, with these others. The only ones that don't operate that way are anything that are coming from the unrestricted cash funds.
I'll come see you another time.
That's fine.
Meantime,
I know it
give
can
me
get
the C
confusing, but that's perfectly fine.
Thank you.
Ms. Creech, this is where I was telling you that the store would be on here. That item is budgeted right there under the administration division. Like I said, it would come out of the construction and development fund. And like I said, there again, once the budget's approved, that would be something that, and like I said, that's, once staff decides that they're ready to go through with that. Some of these things don't always necessarily take place either. Even some of the equipment is on here, it's approved for them to purchase. They may determine that they don't want to purchase it at this time and still put it out another year.
So the store, if they make $100,000, they get 50 and we get 50.
That's correct.
Does the personnel cost come out of their 50 or does it come out of the whole?
Comes out of the whole.
Well, then we're paying half of their salary.
We are. We're absorbing half of the expenses. Yes, ma'am.
Are they absorbing half of the electric and the,
No, ma'am.
I don't like that.
Well, when we looked at it, we determined that the electric and the property insurance and some of those other things, we would be absorbing anyway. Because like I said, whether there's a business over there or not, we have to maintain electricity in order to have insurance on the property.
Okay.
So that's why we said, it made more sense for us to absorb those costs any way we would, whether the
Okay.
store was there or not.
Okay. I would just think with what it's going for and what they're using it for and whatever, that their people would be volunteers and that wouldn't be a problem, but that's only my opinion.
And like I said, I don't know that they may have some volunteers that they use over there, but there's 2 paid employees I know of that are working over there.
Has this already been approved?
No, sir. No, this is just in the budget that you're looking at now that you will approve at a later date. Yeah, right. The addition to the store was approved in FY '14. As you see on here, it's a carryover. It was approved in FY '14. We did not we did not do anything with it, so that's why we've carried it over to this year.
So it could be spent because it's already been approved?
Yes, sir, it could be. But by carrying it over, I think we're kind of making the assumption that they're not going to do it in FY '14, so that's why they're looking for approval to do it in FY '15. But once the budget's approved, then they would be able to go through with that.
Do
if
we
they
have
choose.
to reapprove that, even though we approved it for FY '14? It's already been approved one time.
Right, and you don't have to for 14, you have to for 15 though.
But for the FY '15 budget, we got,
Yes, sir.
That's
It's
coming
not
up.
just
We'd
au-
have
it
to
doesn't just-
reapprove it.
It doesn't get approved one time and then just carry over to whenever they choose to do it. No, sir. Everything has to be moved. If you want to purchase a piece of equipment in this year, even though you don't purchase it, you've got to carry it over to the next year to get it approved to purchase it the next year.
But you get if it's approved in a given year, then we could see batter boards up that sometime that, in other words, it could be, construction could be started.
July 1st, if the budget's approved. Yes, sir.
It could be started tomorrow, because you've already approved it. But what
Well,
you're saying,
I didn't, but the board did. I understand what you're saying. I was the nay vote. But I understand what you're saying. The board approved it. I remember it very well. And,
but if the board does not want to do it, then the board needs to vote it down.
over there, whichever way I'm going, the board's gonna go the other way.
Where you just stay against it then.
Sir?
No, sir, that,
Well, let me say this, and I don't like coming in and saying something about something that's already been approved before I got here. But looking at some of the figures and the loss in C&D we've had for the week and coming up, when I look at a budget, I look at things that we have to operate physically, manually to do the business that the mission is here. And then I kind of look at other things that you can live without. And $335,000 might come in good to pay some bills we have and to balance the budget rather than building a building that I can't see how you'd need it to operate. That would be one of the things I would look at. I will say that now. Thank you.
Well, you need to vote no.
Well, I might.
That'd be two of us.
but it furnishes the money for the Meals on Wheels. There's other things involved other than just the money.
I agree wholeheartedly, but I would balance a budget with that money before I'd build another building to benefit anybody.
Meals on Wheels is federally funded.
So you and Mr. Gray. I'm teasing. I'm teasing.
Well, we may see eye to eye on that.
Yeah, you do.
I believe in having a balanced budget, and I look at things that, there are things we have to operate. That man's got to have his equipment, and he's got to have people that work here. That building, we could actually have somebody come in and auction out everything in both of those buildings over there and start all over again and not need a building. There are ways to, I look at things that you have to have and things that you can do without before I look at spending that kind of money. And if the C&D continues as it has in the week that Mr. Besant says it has, we're gonna be in need of $300,000 or more. And to me, I do understand and I appreciate, and I'm sure those people enjoy the building and everything in it, and I don't want to stop the program. But I'm saying $335,000 in one chunk of money that could be, we could put it off for a year and build the building the next year until we balance this budget and see actually where we are and things we have to have, and that would be the way I would see that.
Mr. Jones?
This budget that staff is proposing, is it balanced?
Yes, sir.
And it's anticipating the losses?
Yes, sir.
Thank you.
Any other questions on capital? We've got like I said, capital is a 5-year budget, and the other out years are there, but I wasn't gonna really put any emphasis on that right now. I'm just looking at 15. So that's really all we've got as far as this goes. Like I said, we're continuing to make changes, and if you have any other questions or any changes you'd like to see, I'd really like to hear from you. I know Mike's got a few things he wanted to kind of go over with you.
I had got some questions from the board. This is not about the budget, but I'd got some questions about the board and was asked to put together some information, and I put together it and wanted to go over it with you. Shouldn't take me just a minute to do it, and we'll be done with it. We had some, first on the list of stuff is we had some questions about the collection and hauling. I think Ms. Creech had asked for us to look at the collection and hauling and the MRF together and give her an idea of what, whether the collection and hauling and the MRF together was profitable or not profitable, or broke even, or how much money it lost. So we put together those numbers, and we went back to 2011, and you can see that from 2011 to 2014, FY14's budget, and we had to estimate the last 6 months of this year in FY14 now. But we are estimating that that it would make about $63,000 in FY14, $45,000 in FY13, for the two of them being together. So it's, if you put the two of them together, it's not a loss. That does not include administration, and when I say does not include admin cost, it doesn't include the finance department, the Danny Knight or myself's cost, those type of administrative costs, because we felt like if collection and hauling was gone, I hope my job wouldn't be gone. So I would still be a cost to the organization. So we didn't take into account those numbers. So this is where we're at. I also went in there and put what our average price we got per ton for recyclable products that we sold in each one of those years. As you can see, in FY11, we were getting about $176 a ton, FY12, $182, and it's dropped by $30 a ton. You know, you're talking, if you're doing about 20,000 tons, you know, you're talking a substantial amount of money each year in tonnage or fees that would be added back to that if we were back up. But at least we've been pretty well stable for the last 2 years on our sales price of $151 a ton average. But over a 4-year period, it made about $2.3 million, those two operations together. So it does take into account all of those numbers. Be glad to try to answer any questions, or if you need time to absorb it, and when the board meeting comes, I'll be glad to ask it or answer any questions next board meeting or budget meeting, or now.
Thank you for doing this. I had a question. I was just going back through these numbers, and I'm trying to recall that that we, this year and next year, we're looking at roughly $3 million in revenue coming out of the MRF, right?
Yes, sir.
But the cost of that's roughly about $3.5 million.
I can't call that number out yet. I think it's about $1 million something for the operation of the MRF. $2 million for the MRF operation is what we have budgeted for next year. Yeah, and another $1 million for collection and hauling. So that between the two of them, got to be about $3 million. Right.
About what?
$3 million for FY15 for collection and hauling and
A
MRF.
number that I came up with of the total cost of collections and hauling, you know, bringing stuff to the MRF and operating the MRF. My number of $3.5 million is not accurate.
Well, if you look at your budget for the MRF, it says about $2 million is the total cost of the operation of the MRF, and about $956,000 for collection and hauling. So those two is about $3 million.
Well, that's consistent with the sheet that you just put out. That's roughly a break even. I need to go back. I didn't think that would be.
And the revenue?
Revenue about, we estimating about 3 million in recyclable sales and about $250,000 in collection. So you got about $3.2 million in revenue and about $3 million in cost. If you combine the two together. And that's what we're budgeting.
So,
So if you look at collection and hauling by itself, it's a loss. But when you put the two together, which we think is integrated together, it's a profit.
You can't do one without the other, can you?
Well, you could
Now,
haul, you could haul it,
have the material that comes to the MRF.
you
Gotta
couldn't,
get
you,
it there.
yeah, you couldn't afford to do it because you wouldn't have the money to support it with.
I'm taking my number from, I know you'll say, well, you're reading it wrong, but on page 5, Recycling Programs Division, it shows there that our cost this year and next year is roughly $3.5 million, and we're showing that,
Well, you're putting, in that 3.5 million that you've got there, you're also picking up public education and corporate affairs. You wouldn't include those two departments.
well, it depends on how you define what does it cost you to do recycling, but I understand what you're saying, just dealing with net operating costs and total revenue is break even. If you add in these other things that you left out, for instance, up here, total cost without administration, that implies that there are some other costs we just didn't.
We think, Mr. Gray, that if the MRF was not here and we didn't have it and we didn't have collection haul it, that it's still our mission to do public education. And corporate affairs doesn't have anything to do with recycling. Except for Esther's management and all the ones they keep involved in, that corporate affairs has to do with a lot of other stuff than just the MRF.
So the takeaway for right now that I need to take from you is that we roughly break even without regard to administrative costs.
Basically a break even for 2 years, but over a 4-year period, we've made 2.3 million.
Okay.
And it goes back to what I said that day was, do you want to kill the horse because he didn't plow the field one day, or do you want to wait till the next day and see if he can plow the field?
Yeah, I understand about the market cycles, and I also understand about our obligation to absorb costs of educating the public about recycling. We're just trying to deal with numbers, but I get the blowback. I don't see any need to.
Well, I mean, I ain't trying to blow back or stop you. I mean, the facts speak for themselves. I mean, we, those are the revenues and those are the costs. And, we'll be glad to sit down and go through those numbers with you anytime you want to. Jan and I went through them and chopped them up and beat them up and made sure we could stand by them. And we'll be glad to go through them with you.
Thank
you. Like.
Thank you for
I've had
doing
enough
that,
over
too.
the
I
last 3
appreciate it.
years. I have one other question, if I may.
Go ahead.
The last number I remember when we were explaining things to county council was that we anticipated about 35,000 tons loss as a result of the carve-out of C&D and some $925,000 in total revenue. Is that
Correct.
about right? I noticed today we were using a $30,000 figure, which was a figure we had used at an earlier time.
Can I explain that to you?
And it cost them $720. But,
Can I explain that to you?
of course,
When we looked at budgeting the tonnage for next year, we felt like we would be unfair if we didn't take in for growth, economic upturn. So by taking in, we estimated that an additional 6,000 tons would be coming in. When we were giving that number to the county council, we was doing it based on 90,000 tons. We said with the upturn of the economy, the increase in building permits, we should be doing, based on prior years of increase in C&D over the last few years, that we should do about, if we were getting it all, should be about 96,000 tons this year, if everything was still coming to us. So that's why we reduced it to 30,000 and took into account that growth.
thank you. did I understand you to say that right now, our projections are that we might have a $400,000 shortfall in revenue in this fiscal year based on C and D carve-out?
Well, we've had some, in just the C and D carve-out, the effects will be about $795,000 of what we expecting next year. However, you know, we have got some revenue back in there through increasing interest rates and other things that we think we can increase revenue from, that's absorbed some of it.
I was talking about this fiscal year.
It's gonna be hard for us to say what it is, but if it continues like it do, it'd be down, I think the number's about $400,000.
Yeah, that was a huge take-back number for me.
Yeah.
That,
I mean, we lost 1,500 tons with all the storm in February, just from 2 haulers. We didn't take into account everybody, but just 2 haulers that just quit coming here. So, or I'd say 90% quit coming here. So, you know, we don't know what the exact effect's gonna be on us. We know that the first week of March, it was 33%. Next week, we hope it's none.
So, right now, we as a board, the best advice, and I understand there's a lot of assumptions here, and we're looking at a crystal ball, is that there may be a $400,000 or significant, 200,000, whatever, shortfall, this year that we haven't talked about until today.
Well, we've talked about it because Danny's been holding costs back. He wouldn't let us hire people during the first part of the year, even before C&D flow control changed. There's been several costs that has not been spent, anticipation that if it happened, we would have enough time to absorb it over a 4 or 5 month period, that $400,000 hit, rather than trying to take it in the last month.
I heard Danny speak to that, and you, and, but for me anyway, this is the first time that I've heard at the board level that, you know, we might be facing a serious shortfall in revenue this fiscal year, which ends in a few months. And then you're sticking with, right now, you're sticking with the 925,000 or thereabouts loss for next year.
Well, because we reduced it from 35,000 to 30, it's 795,000, because we think growth will take up the rest of it.
So that's right, roughly 800,000.
Yes.
Okay.
And that's just in tipping fees now. Loss, reduction, because of the material going somewhere else.
Right. But as Northleaf pointed out, you've been able to balance off that 800,000 if it occurs. Balance off and so forth and so on. And if you want to build that building over there next door.
Well, that building will be built with money that was put in there over several years. That money could have come from 2011 or 12 timeframe, not this year. That money's been saved over a period of time, so it's not taking in out of one budget over 1 year. It could have been over 4 or 5 years, that money put in it.
Started since I got here, but
That is when the building got started, but that's not when the money went there. The money's been in the account.
Where were we gonna pick up the $800,000, Mr. Gray? Where you talking about picking up 800,000?
that's what they said they were going to do.
What, we had to reduce the budget by $800,000, and then we took into account any increases we get, and it kept chopping away at it, reducing costs and chopping away at it, till we got down to around 400,000. After we did went from 0 on interest to 150,000, we reduced that 800,000 by 150. Then if we could increase revenue and sales somewhere, we kept reducing it again. So we actually looking for more sales. How can we get more sales, to try to take away from that number to keep from having a negative impact on the SWA?
$800,000 shortfall or a $400,000 shortfall?
There's going to be $800,000 less revenue coming in for C&D.
Right.
With some additional revenues coming in other lines of business, it'll be around 400,000.
And that's the budget figure for FY15.
Yes, sir.
No, that's now.
No,
No,
that's,
I'm sorry.
That's for the budget figure. We're talking about increasing our revenue. How about the marketing assistant?
we don't have the money to put in there right now. Maybe next year, if we get some more money, and we might come back to the board and ask them to fund that position, but
But you
know.
have had some conversation about maybe,
we have had some conversation amongst ourselves about it, but we don't have the revenue right now to do that with. unless we can cut some of the programs that we do, we don't see being able to fund anything else. Or put more money into contingency fund, or do anything else. There's a lot of things that we think we could do that would help make us more efficient, such as maybe putting a grinder system in over at the MRF. But we have no revenue, the processing facility, the MRF C&D factory. I'll get that right in a minute, factory. You know, we could put in a grinder over there to grind the wood rather than have to handle it 2 or 3 times and take some pressure off the yard waste facility. That's $425,000. We can't find it. Mr. Gray has asked for the board's system to be upgraded. We don't have the money to do it with. We've scraped with it and we can't find it. We could increase the productivity in the MRF, get more PET out if we had an optical sorter. That's $600,000. We don't have the money. And unless we can find some way to reduce something that we're doing that we can't find the money in now, and the only way it is in the incentive programs, is reduce and start setting aside that money, we'll never be able to get to that.
That is one of the reasons, and that is another thing, and I don't want to beat a dead horse here, but $335,000 would be mighty close to being able to buy a new grinder. And if a new grinder is gonna help us be more efficient, save money, and make money, I like things that make money.
Well, you get a chance to vote on it going forward.
Yeah.
All do.
Yeah.
Yep.
It might be 5-2 instead of
It might be.
6-1.
But you know what I'm saying is, if we have, whether it's a piece of equipment or whatever it is that makes us more efficient and can help us recycle other things and make money, if we did that with some monies we found and then saved 2 or 3 years from that, you'd have the money to redo your building or do whatever, but I usually like things that make money a whole lot more than I do inert things. I'm just saying.
Yeah, I think we're gonna try to wrap up here in just a minute, but I want to finish going over this sheet with you, if you don't mind. And of course, you know, y'all, this is the pre-budget workshop, so we still got the workshop to go through. So y'all got time to talk among yourselves and absorb what we give you today, so we can definitely talk about it as we get to the full workshop on the budget. But the, on the second line of this budget, FY11 through FY14, this was done on the collection and hauling. Give you an idea, we hauled during that period, collection and hauling department hauled 22,676 tons. That gave us an air savings of the landfill of 60,531 cubic yards. We added 67 more days to the life on the landfill. In other words, if we were to end in January 1st, 2043, because of what they've done just those years at a time, we've increased it by 67 days, which is revenue of $1,414,000 that we'll be able to generate because of those 67 days, and a net profit of $204,000. That net profit is generated by taking away the cost to bury it and put it in place, including closure and post-closure on that part of that 67 days of MSW, and what we would have netted off of that. So that's what the collection hauling effect has had on expanding the landfill from FY11 to 2014, FY14. Any questions on that? Okay, and the C&D factory, FY12, we started it in FY12 through FY14. We've collected about 26,774 tons. We've saved over $52,000 worth of airspace. 108 days we've added to the C&D landfill, portion of our landfill. 108 days, or $709,000 worth of potential revenue and $240,000 in net profit. That's the effect those recycling operations has had on our landfill just for that short period of time. Got to realize the collection and hauling's been going on since the mid to late 90s, And it's had a long-term effect on, more so than that. That's just over a 4-year period.
Thank you, that's very beneficial to me.
That's all that I have.
Very positive input.
Very.
Yeah.
Yeah. Bill has got one thing he wants to tell you about that doesn't have anything to do with the budget, but he wanted to make sure the board was aware of it.
It's spending money, so it's got something to do with it. Anyway, I just want to give y'all an update on the, we're going to close the East Hill, the 30 acres on the backside, just some dates, because I know y'all like to come to these. The mandatory pre-bid is going to be next Wednesday, the 19th at 1 p.m. in here, mandatory pre-bid. The bid opening will be April 10th at 2 p.m.
And the
this will
pre-bid
be-
was when now?
The pre-bid is next Wednesday, the 19th at 1 p.m.
319 at one.
And this will be for what?
This will be for the 30-acre closure site on the backside of C&D. It was approved in last year's budget.
What do you think that's gonna be?
We estimate, we budgeted $7 million.
Yeah.
That's a pretty big chunk.
It's 200,000 cubic yards of soil brought in. So that's,
200,000?
yeah,
200,000, what?
cubic yards of soil. Dirt, whatever.
Yeah.
All right, and also, we're gonna be doing, when we get, after, we get the bids turned in and they're analyzed, and I don't have a time yet, but April 17th, we'll probably be doing contractor interviews. It's such a big project, with some of our local folks getting involved, whether, the experience they have in this type of work. So we'll be sitting down with the engineer and probably the 3 most qualified contractors. We'll be talking with them to get an idea of what their game plan is.
And
to
what
do
date will that be?
That'll be April 17th. No time yet on that one. And then we'll notify the board on the 22nd at the regular board meeting of our choice of contractor out there. And then, of course, 14 days after that, we'll give the notice to proceed, providing no one protest our decision.
You're gonna take the lowest 3 contractors in an interview,
The lowest 3 qualified.
lowest 3 qualified. The restriction on this, project, is it as severe as it is
No.
putting into cells?
It's open to all the local people,
Okay,
because they can contract out with, a liner company to
Sure.
come in and do it.
Our goal in that process would be to see who they, during the interview process, to see who they chose as the liner people, so that we'd make sure that whoever the liner people was able to have the qualifications to do it.
There's only 2 or 3 companies that actually do the line of work. But some of the things have to be really time coordinated out there. And if we want to get an idea, does the company coming in, the contractor, know what he's doing and has a good plan to work with us to proceed in the order we
You're gonna
need?
interview them one at a time.
Yes, sir.
What time on April 10th?
April 10th will be 2 p.m. And interviews, I don't have a time yet. We got to see who it is, and we'll have to set those up, but we will let you know via email.
I would
If
think
you'd like
you
to
get
come.
quite a few bidders on that.
$7 million job, I would think a lot of people would be jumping all over that.
Say what?
Really?
$7 million job, I would think a lot
Oh,
of folks
yeah,
would be
I
absolutely.
interested.
think so.
Your buddy Donald Godwin's batting 100%. He getting every dollar.
He's gotten everything else out there. Yeah.
And
That
that's, I
ain't-
want
that
to
ain't always-
get y'all up to date on that, because I know y'all like to come to the bids.
That's good information. That'll be real interesting, that.
Yes, it will.
Yeah, we're anxious to get that one started.
How about how you doing on your, finishing up your project? Moving your yard waste and all that?
It's very close. It's 95% done. I'd say substantial is almost complete. And then there's some surveying that's got to be done out there, but very, very close.
But then anything that comes in, yard waste and all that kind of stuff, will be sent back there to, right? Once we get it open?
Once it's all worked out, yeah, we'll
Yeah.
get us a game plan together, how we're going to work that. Right now, we've got to get all this storm debris ground up.
And-
And,
right.
of course, we're recycling a lot of that too. It's going out.
People buying it, or?
Holmes is coming in, trucking it, we're selling it for boiler fuel.
Oh, all right, Holmes is paying you four
Yep.
and a
And we're
quarter.
separating the green waste from the old waste.
They paying you 4 1/4 a yard for it?
I think it's $4.15 a ton.
$4.15 a ton. How about the Y? Completion of that?
That's pushed out, weather has pushed that out, I think it's somewhere around April 9th, maybe right now. I mean, if, just, you know, with the rain we've had.
They
I
right
think-
here then.
Yeah, I think last week or week before, we had another 3 inches, and it just slows them down because they're hauling dirt. And the problem is, it's not so much out here, it's the work in their pit.
Right, understand that.
When is our next meeting, Mike?
The budget workshop, I didn't bring my calendar, I believe it's scheduled for April 8th, which is a Tuesday, at 1 o'clock, lunch being at 12:30.
And I don't mean to say this,
April 8th.
but we'll be going over some of the same stuff we did today.
Well, like I said, yeah, I mean, that's where I need to know any kind of changes that we need to make, because basically, it'll be the exact same information, you know, without having any changes today. I'll add to it Fund 6 budget as well, which is for the unincorporated collection system. I'll add that to it as well. It'll be a complete budget, just like we would normally put out at the end of the year. So that's why any time that you can take to look over it, any kind of changes you recommend, you know, would be great to have for that date. Because after that date, we won't meet again until we approve the budget,
Yeah, I got it out for.
unless we need to. At 1 o'clock and lunch at 12:30,
What day is that?
April 8th.
Oh, you gonna serve lunch?
Yes, sir. And we'll try to do it early, so that way we're not taking,
You talked the director into serving lunch?
I didn't even ask. How about that?
He told us you were paying for it.
Oh, Mr. Gray, can you help me with a little
Yeah,
piece?
we'll pass the hat. Be like a church collection.
There we go. And that's, and what time is that, did you say?
At 1 o'clock, lunch at 12:30.
1 PM, lunch at 12:30.
And as Mr. Knight stated, if you have any questions, anything we didn't get answered today, anything you need clarification on, please feel free to call me. You can come in and see me. I'm here just about every day, all day long.
I know I speak for everybody here, but I really appreciate the time that you and Mike and Bill, everybody have put into this.
Thank you.
I know I'm slow on the uptake, and, I'm, on account of Dr. Coakley, I'm buying me some ears, but, I just say that lightly, Jim, but, I will say, and I'm sure y'all are aware of it, that the sound quality on anybody, I doubt if anybody watches it, but if anybody, I did try to, go back and pick up something, I think it's when you changed the minutes. I could not understand the words. I mean, we got some, but I doubt if anybody hears what our sound quality is. I'm talking about it goes on the tape. But if you ain't got the money, you ain't got the money, so.
Well, and those are the things that, you know, when we come back together on April, I'd like to know that. And like I said, in that contingency fund, I really need some guidance and some direction on what the board wants to do to try to put some more money into that account. So,
Well, if you can pick up $800,000, to be sure, you can pick up $20,000 and put in a decent hearing system.
well, I could, but you might not like the choices I make to do it, so I prefer that you give me some direction.
I actually feel appreciated.
For the closed caption.
That'd be a $20,000 upgrade instead of a 10.
Are there any other issues?
Move adjourned.
Meeting's adjourned.
Thank y'all.
Thank you.
Appreciate it, everybody.
Good to see you, Dan.